Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Here we are on a Tuesday morning start. It is already February 17th. Huge day on the network. Huge, big day. Big day. We've got Lyn Alden coming up today.
Yep.
That's big. And who's in the house today? Larry Williams. Larry Williams will be in studio with Jimmy later. So stay tuned throughout today's show for, obviously, we'll get to the rest of the panel, but just wanted to let you know that those two guests are with us here today. Quick look at the markets. We've got S&P off around 32 points this morning. NASDAQ's down around 220. Russell down about 7. Dow down about 130. So equities trying to hang on. What is hanging on and continues to show a bid? Crude oil, bond market. That's where the strength is. I put that on my morning note. They continue to... That's where the market's proven to you it wants to stay in a direction. Equities, I still think, are uncertain here. I'm not convinced we're going down. I'm not convinced we're going up. It is what it is. We'll talk more about it with the panel. Bond market, like I said, is bid, and the dollar's strong against pretty much everything this morning. So we'll dive into all of that today. Joining me in studio, senior economist Tracy Shuchart. Good morning, Shai.
Good morning, all.
Macro strategist Craig Shapiro.
Good morning.
And Jimmy Cagnina, senior market strategist. Good morning, Jimmy.
Good morning, Naples.
Yeah, like we said, big day today. Looking forward to you and Larry later. Looking forward to Lynn with Shai and I. But before all that, Shai, the news.
So real quick, though, Anthony, I think Larry's tomorrow.
Oh, Larry's tomorrow.
Yeah.
That's right. See, I'm getting ahead of myself here, everybody.
Today,
he's in town today.
That's what threw you off. All right, so overnight it is all about oil. We have Iran and the U.S. meeting for a second round of nuclear talks in Switzerland. Now, oil has been, if you're trading oil today, please be careful. The headlines are coming out. It's been crazy. But Iran said that it was closing parts of the Hormuz Strait as U.S. talk resumes. It said that they were going to close the strait for several hours as part of a military drill, the state reported. I think it's in response to the buildup of capabilities that the U.S. has in the region. But so we did hear that. Oil kind of shot up on that. Then it pulled back when Iran said they're ready to stay in Geneva for days or weeks to reach a deal. And then after that, we had Khomeini said that threatened the United States again. So a lot of headlines going on with oil today. It is bid during all of this. I'd like to mention also, I put a post out on X. This market is irrationally short right now, so anything could set off a short squeeze on this. I mean, this market, WTI is very short. So just be careful trading oil today, particularly with this back and forth between the United States and Iran. Moving on, obviously, you mentioned earlier, we have the dollar on the rise. It's higher for the second day as currency traders bet the Federal Reserve won't be able to deliver 3 cuts in 2026. Hedge funds have dialed back bearish bets against the greenback as strategists question whether the economic data will unlock interest rate cuts on the scale expected by investors. As you know, we had better than expected CPI last week and better than expected labor market. We also have treasuries on the rise as stocks are jittery. So the global bond markets actually are up, except for gilts.
Gilts? Gilts are down. Win some swag right now if you could even tell us what a gilt is in chat. Go. All right.
All right. But so we have treasuries on the rise again. This comes to kind of an added on move to that strong move we saw at the end of last week when wagers grew that slowing inflation would drive rate cuts and propelled treasuries to their biggest weekly gains. We also have in Japanese markets, Japan bonds also extended rallies. They had a great 5-year auction overnight. And the yen outlook is also improving. Most analysts think we have found a floor. And I hate when they say we found a floor, but
It does look that way, though.
but it does kind of look that way. We're back, USD JPY is around 152. That's considerably well off the highs of 159. And so we'll see how that goes. From a policy perspective, Japan is moving toward a combination of looser fiscal policy and tighter monetary policy. In economic theory, that's ideal policy mix for currency strength. The fiscal support reinforces reflation and underpins equities, which we're already experiencing structural improvement. Meanwhile, gradually rising rates increase the relative attractiveness of JGBs. So keep an eye on the Japan market. We keep saying that. And then last but not least, we have it's called Ramageddon. We have rampant AI demand for memory is fueling a growing chip crisis. So we have currently Ramageddon. So we currently have a shortage of memory chips. We've been kind of having this problem, but this is kind of getting entrenched in the market. Nobody sees a way out of it right now. And obviously the fundamental reason for the squeeze is build out in AI data centers with, companies like Alphabet and OpenAI buying up tons of shares of memory chip production. And so this is affecting everything from consumer goods as well, computers, laptops, phones, et cetera. And so might see some price increases on
Inflation?
that. Inflation, yes. And then just as a reminder, we have China markets closed this week for the lunar holiday. In fact, almost all Asian markets were closed
No wonder gold's down.
today. And the metals have been very crazy moves, sporadic moves overnight. I expect this to continue for the next week. We might see a lot of volatility in those markets because China is absent from those markets for a week.
Yeah.
And then moving on for data today, we have at 8:15, we have the ADP weekly. That's just the weekly. It's kind of never on time, so we'll shout that out when it comes in. At 8:30 a.m. ET, we have Empire State Manufacturing, not a market mover. And then 10, NAHB Housing Market Index, also not really a mover. So quiet day on the data front.
Yep. And Shab Cap got it right. Gilt's a UK government bond.
I was going to say it, but I thought,
We want to know. We're trying to keep them on their toes.
Right.
I mean, not often you hear. We're not talking about gilts in here too often. Guilds. Craig, what'd you see in the overnight tape?
Ramageddon is not to be confused with a SaaS-pocalypse. So
I can't keep up with this
those
stuff.
are two sides. Those are the opposite sides of the
sides.
coin there.
It's getting really weird out there in Twitterverse.
Yeah. An old mentor and friend of mine used to randomly often chant out, "What's with the gyrations in the long bond?" I think that's the most interesting thing that we're starting to see here. We've been talking for a few weeks about the range-bound nature of the long bond, and I know your charts have been showing kind of that pinch Bollinger Band, and then all of a sudden, over the course of, we didn't know exactly how it was going to break, right? It looked 2 weeks ago like the supply issues from Treasury acceleration and the Google bond deal and a lot of IG. We thought, oh, look, the supply story here for bonds is not great, so maybe we're going to break out yield to the upside. There's some inflationary pressures, crude moving, commodities are moving. All of a sudden, 10 days later, where are we? We've broken, bonds have broken up, yields have broken down on back of really, reasonably okay payroll data last week, right? The non-farm payroll data did come in better than expected. And so to see bonds react so violently positive on back of that news I think is very interesting. Now, we did have basically a 1 million job negative revision to 2025's data. So there is
only 1 million?
There is that as well. But and we did have inflation data last week in the CPI, which came in largely in line, and actually the core PCE, which comes out later this week, is going to show reasonable acceleration. So, and that's not necessarily something to rally bonds, but bonds have been rallying, big time. And so the question is, what's the narrative there? And I think the narrative is some combination of the deleveraging that we continue to see. We've been talking about it for weeks here across various asset classes, and last week under the hood in equities, it seemed like it was picking up some momentum. But we're also starting to see more talk about potential deflation coming from the AI story, right? And we've seen various sectors just continue to get annihilated as new entrants are coming into a variety of different industries and are threatening the economics of those industries and the profit margins. And so I think the bond market is starting to really look ahead and say, wait a minute, if all this AI is as good as is perceived, right? We've had new releases from Anthropic and ChatGPT over the course of the last few weeks, which have really exploded usage and coding and the like. And so if it's going to be this deflationary, this is why bonds are rallying. And so I think there's a double dynamic there of fear about the deflation. Now the question then becomes, if it's so deflationary that bonds are rallying, what does it mean? Excuse me. What does it mean for profits? What does it mean for stocks? I mean, profits are going to get killed in this environment, right? Whether it's the software profits, whether it's any of these companies that are, exposed to new entrants coming in. Now, there will be a transfer of profits to the hardware names, the memory names, some of the energy names. But if you think about the composition of the S&P and the NASDAQ, clearly they're top heavy in things that are going to go down in light of this environment. So I think that's an interesting dynamic that's playing out. And the last thing I'd say is the dollar. You mentioned it earlier. I mentioned this last night on the Sunday show, but B of A sentiment survey on the dollar is basically, record short. I mean, 15 years of tracking data, the sentiment's never been this bad, being short dollar. So short dollar is a highly consensus trade. Everyone's been in there. And, look, the DXY is, it's kind of stopped going down a little bit here. We'll see. I think if the dollar were to pick up some positive momentum over the course of the next few days, another struggle point now for risk. I think we'll see some more risk off if that continues.
And there's so many ways really to be short the dollar too, right? You think about it, the unwind in metals, you start selling metals, you go back into dollars, right? If you've been long any of these currencies, you go back into dollars. And so it's not just, I don't really know how you short the dollar index itself. I mean, I've never traded that personally.
There's dollar futures that you can.
Yeah.
But it's on ICE, not CME.
Yeah. But, I mean, is that really where they're looking at where the record short is off of that?
Yeah, I think it was more of a fund manager survey sentiment indicator about how people are positioned. So, but yeah, I think dollar strength here is certainly a pain trade. We've been talking about the EM outperformance and carry trade. Blake's been talking about the strength in the Aussie dollar, the Mexican peso, and a bunch of other carry currencies. You start to see some negative performance there. It exacerbates some of the unwind that we started to see over the course of the last couple of weeks. Yeah,
I mean, and it's coming at a time, if that's the case, again, I look at metals. I mean, the metals don't look great to me, I mean, to me, gold can come back down another 200-300 points. I mean, in the short term, that's nothing for that market. It's down 100 overnight.
Yeah.
And I think that, we'll see what that does across the board. And I wonder what it does to equities, because if the dollar starts getting stronger here and equities are teetering, not super bullish. Doesn't support it. And with the bond market getting bid the way it is, and again, why is the bond market getting bid is important in this moment. And if it's deflation, I mean, again, I'm still trying to wrap my head around it, but who knows? We'll talk more about it. Jimmy, let's go to you. Let's take a look at the tape this morning. Again, equities, S&P off around 36 this morning, 68.14. NASDAQ's off 245 to 24,557. Russell's down 11. Down the least. The Dow and the Russell, again, down the least, which is important to note. 2641 in the Russell, 49,406 in the Dow. What's up? Crude oil, 70 cents, 63.45. Natural gas is off 150 ticks. It's back down to 309. And heating oil is up 41 to 234. Gold is off nearly 110 to 49.37. You've got copper off, 132, so it's at 567. Or 13 and a half ticks. And then you've got silver is down 39, or not 39, $3.97 to 73.95. And then platinum back below 2,000, off $82. Again, metal slide, dollar bid. What's that, Shai?
Yeah, and and I think a lot of it, again, has to do with the fact that the Asian markets were closed because a lot of, the Asian markets trade a lot of metals.
Yeah, we've been talking about that. Again, and the charts don't look that good, and you lose that Asian bid overnight, from the Asian traders, and there you go. And again, I'm not super bullish metals right now. The charts just don't look great to me. I mean, they're looking like a short-term top is made. I'm not talking about the bigger top. I'm talking about the one from last week. We'll talk more about that though. Bond market, again, that's where the story is. 1 to 18.04, 118.04 into 30s. 10-year yield this morning comes in at 4.03. I mean,
Breaking
we
out.
could be sub 4 in the 10-year, you know? I mean, that's
lot of
we've
people
not been
were-
there in a while.
A lot of people were talking about that. Kind of this group chat I'm in with a bunch of economists.
Smart
and-
people. I'm not in that chat.
And a lot of them think that we may slip below 4, but it won't last.
Yeah.
So we'll see.
And then again, across the board, everything is weak against the dollar. Aussie, pound, euro, pound the most actually. Yen the least, because again, the yen looks a little bit bullish. And then you've got Bitcoin sitting right around 68,000. Jimmy, what say you?
Yeah, I think the UK just came out with their unemployment rate over 5%, which isn't a really good thing. But really, the currency story is, the commitment of traders on Friday for the Euro FX. Specs increased their net long position to 180,000 contracts. Hedgers increased their net short to 236,000. These levels are the highest since May of 2023. So the euro is getting some interest across the board versus some of the other currencies. I know the Aussie dollar was in the spotlight last week, but keep your eye on that euro and see how if that commitment of trader report kicks in or not. But the other big thing is the correlation between the bonds and the indices now are almost 100% inverse at this point. With bonds at Pax's level at 118.06, actually that is Pax's line in the sand right now, 118.06, and equities. The S&P chart looks really, really ugly. I mean, I see the swing low that we saw all the way back in December on my radar screen right now, and that's at 67.71. So I'm a little bit worried about the equity market right now. Pretty decent red candle to get started so far today. But so those are the main stories. The last thing I looked at this morning, which I was kind of a little bit worried about, was Dr. Copper. Dr. Copper's off. I know all the metals are off, but kind of look at Dr. Copper as the copper futures is the one with some kind of sanity to the way it trades. Well below our some of our targets around 6.00. We're below $6 now, 5.66. So that's also not a really healthy indicator. This market just can't get any movement on the upside.
Yeah, I mean, the more I look at silver, copper, platinum right now, man, they're teetering. It's just not looking good. I mean, if you're long, you're sweating it. You're like, man, you better hold this low. It's just, let's call it what it is. It's not, if I was long, I would not be, my stop would be tight. I'd be a little bit concerned.
Yeah.
Back to the panel, again, and I'm going to talk with Lynn about this because I think this is the story right now. Well, there's two stories, I think, right now. Energy continues to do very well, which we'll talk about here in just a second. But the bond market, again, I still can't wrap my head around why it's up so much. You have this data come out, and again, this is probably being the first thing I talk with Lynn about, is trying to understand it, because now you're starting to see things. This tape is maybe finally starting to show us what it really wants to do. It wants a stronger bond market, a stronger energy market. Energy continues to, outperform. And maybe, just maybe, stocks really start to go down here with metals. And that's maybe the tape that we have. I mean, that's, to me, is what it's starting to set up like.
Yeah. I think the issue that the bond market maybe is sniffing out is this. It's a bit of a stagflationary environment, right? For things that people need to spend money on. I mean, I just got an announced email this morning that I know this is funny, but my pet insurance, right, it was up 35% year over year. Now, is that something that I'm going to now?
Well, you have 16 pets.
That's true.
So for him, that's a big thing.
But 35% now, I'm not going to, so there's pressure, I guess, in other insurance and things that people generally are spending money on and have to spend money on, whether it's auto insurance, home insurance, health insurance, pet insurance, things that they're definitely going to spend on. Those numbers are going up. The discretionary things that they're spending on, maybe that's where you're seeing some of the deflation, but it's the consumer wallet share that is completely, is very stretched. And so the discretionary ability for consumers to spend money on things, I think, continues to go down. And I think that's what the bond market is starting to become more concerned about, the lower part of the K-shaped economy. And I think if you start to see an equity market hiccup, well, that's been supporting the high end of the market too, right? I mean, people who are looking at their portfolios over the course of the last few weeks and have had any exposure to any SaaS names and any software names, which have been the stalwart performers for, a decade, are going to say, wait a minute, my 401k is 10% off the high or 7% off the high. I've been, what's going on here? And so if we start to lose that ballast from the equity market, or some of the individual names are not performing like they were, then the whole wealth effect argument starts to get unwound too. And then finally, just on the AI story, I think the narrative about AI is a productivity enhancement and profit expander is starting to become questioned, because the competition from new entrants that have AI are coming in at such significantly lower prices. They're going to way overwhelm any of the cost savings, right? And basically have software companies that are coming in and giving things out for free versus people paying whatever, tens of thousands or hundreds of thousands of dollars for seat licenses. And so the potential deflation associated with the AI advancements and the likely displacement of labor, I think these are things that the bond market is starting to wrap its heads around. Wait a minute, if AI is as good as we think it could be or is, this is eventually going to be very deflationary and profit contracting for large parts of the economy. That's, I think, what the bond market is starting to become concerned about. And in the meantime, energy is bid and electricity is bid and the build out is inflationary. So, but it's not going to be
consumer
right. But it's a growth problem, right? It's not something that we're not going to accelerate growth to the consumer here because of all this. People are going to continue to feel the crimp, and I think that's probably part of what the bond market is wrestling with, and that's why we've seen this breakdown in yields and up in prices. I think that reality is starting to come, a little bit more to the foreground.
Yeah, and I think it also talks about why Bitcoin can't get, off its butt here. Any sort of rallies continue to be sold. It can't get any momentum off of these lows. Those buyers are, So, Shai, last word before we get into Edge Report with Jimmy.
Just again, be careful with crude today. There's a lot of headlines coming out on the geopolitical front, and so you don't want to get caught. Keep your stops tight, light on data today. So,
yeah. Exactly. Well, we're going to talk more with crude, I think, too, with Lynn. All right, everybody, it's about that time for this morning's Edge Report. Take it away, Jimmy.
All right, let's start with the E-mini S&P chart. This is a daily candle chart. We are down 3.14% since this peak high that we saw on January 28th. We are below the yearly VWAP. We are below the anchored VWAP from November, below the yearly open, below the yearly open low. This is not a healthy looking chart. This is looking pretty negative here for the E-mini S&P. We have a swing low target here, and this is all the way back from December 18th. It's 67.71.50. All of this retracement is getting washed away right now. We're tagging this 23.6% level right now at 68.20. So a lot of negative things, including the RSI, which is approaching 30, by the way, and a nicely downward sloping trend. Intraday, we have some great targets, though. So this is going to be a good trading day, I think. We do have on the downside, we have this put support that we never got to, 6,800, nice even level. Below that MenthorQ one-day minute, 67.77, is another target on the downside should we keep failing. Alternatively, we're trading around JX3, we're trading around JX1, 68.25 right now. There's a blind spot 1, which is another MenthorQ level right by the official point of control right now, 68.30. Previous sessions lows are defining the top of the conversation, with the exception of that London initial balance kind of, probe target wick on the upside. But really, resistance is right here. It's around 68.41 previous sessions lows. Then we have that 0 DTE call resistance above it at 68.50 for a target on the upside. And if we really get a bid, a couple more targets. We got that JX2 at 68.75, and we have previous sessions highs all the way up here at 65.85. So some great targets for intraday trading for this market. Let's shoot over to the Treasury bonds. We've been talking about this a lot. Let's start with the daily. Is this a daily? Yeah, I got my daily chart up here. We broke through not one consolidation level, but two. Right now we're trading above remember that old consolidation level here, that one from November and December? We broke through that as well. This is a really, really huge move up on the 30-year Treasury bonds. We're at 118.06 right now. Really, this old double top here, which which I think was resistance, is now support, and it's pretty darn far away. 116 and 18/30 seconds. And look at that RSI. RSI is at 70 right now, and it is driving up pretty sharply here. So a lot of upside momentum here. Intraday, we also have some targets here, right? We have previous sessions highs at 118.09, and then that 1-day max from MenthorQ, 118 and 15/30 seconds is a target on the upside. Should we get some more buyers involved? And above that, there's a lot of empty spaces you can see on my chart. Not a lot of targets. Official point of control, we're right above it a little bit, 118.06/30 seconds. We have 0 DTE call resistance, 0 DTE gamma wall, and the regular call resistance at 118 even. And then below that, previous session's lows would also be an area of interest, 117 and 24/30 seconds. So we'll see if this thing keeps rolling. Rolling higher, surprisingly. Let's shoot over to gold. Gold has also got some good levels here as well. By the way, on crude oil, we are in April crude oil, everybody. And same with heating oil, same with RBOB. So just remember, it's time to roll because that's where all the volume is. Intraday for gold, though, we're right at a 50% retracement from, really this is the beautiful chart because this is a January area where we launched off of, and it was, 43.19, spot 7, and we hit that peak. We're right at that 50% retracement. My midpoint here of this benchmark candle, 50.77, we only closed above it once and we had no continuation candle on the upside. That's kind of bearish. It took us a long time to get there as well. And so right now we're trading between that midpoint and that VWAP that I tagged from January 2nd. That also corresponds with the 61.8% retracement too. So closes below here is going to be even more bearish right now. RSI is not helping me that much. Intraday, we do have some targets here. Look at that high vol level. This is a really important level for MenthorQ. We tagged it last night. We touched it, and then buyers brought us back up. So that's, again, that would be a target. Should we get some sellers in here? We're above that session VWAP. We're trading around that session VWAP, actually, just about every single 30-minute candle I could see. 1-day min, I know it's a min. It's in the middle of the chart, but it's still a 1-day min at 49.61. Above that, we have JAX 1 at 5,000, and then 0 DT put support at 510. That is this morning's Edge Report. Back to you, Deli and Shai.
Thanks, Jimmy. Shai, preview of our guest.
She needs no introduction, but we do have Lyn Alden, who is founder of Lyn Alden Investment Strategy. She is also a best-selling author. She wrote a book in 2023 called Broken Money, and she joined the board of directors in 2025 at Bakkt. It's a publicly traded company that focuses on digital asset infrastructure and neo-banking. She's been on every news channel and news outlet ever. And so, and of course, she is on X, so I'm sure everybody knows her, but she needs no introduction, but looking forward to speaking with her this morning.
Yeah, no, I've been following Lynn for years. He's definitely one of the best in the business by far. And we're going to dig into some really important topics where we are at this point right now in the markets, which I think we need a little bit insight from Lynn. Let's take a look at who else is going to be on the network today. So like we said, we have the Morning Gap with Lyn Alden, and then we'll be followed by Tape Talk with TTrades, as usual on Tuesdays. Trade the Open with Merritt and Christian. And then we've got Midday Markets with XY and Jack, and then Trade the Close with Joey, Nick, and Leo. Oh, boy, a lot to talk about with Lynn.
Absolutely.
Let's bring her in. Lynn, good morning.
Thanks for having me. Happy to be here.
So, Lynn, let's start off with, I think this tape has changed a little bit from the beginning of the year. You see a 10-year yield now sitting just above 4%. You've got the 30-year bonds pushing up into almost the mid-118 area. And so we're seeing rates come down across the board. And now we're seeing metals start to slide, equity start to slide. Talk us through what you're seeing right now.
Obviously, a number of factors going on. I think the biggest weight on stocks is the shift from the Mag 7 being very cash flow positive to basically using all of their free cash flow for CapEx. And so they used to have, relatively asset-light businesses relying on network effects. A fairly low amount of investment could give them a lot of profit, and they would just plow that into buybacks. So you just get the stock price kind of smoothly going up over time. And now that they're shifting to very asset-heavy models, most of them, and they have such concentration in the S&P 500, so I think that weighs it down. And then metals, I leave that more to people who follow the technicals, just because the moves have been so volatile. I was bullish on precious metals for a long time, but after they had these very vertical moves, I view most of the asymmetry as out of the trade at this point. And so I think, momentum obviously can bring them much higher, but I would not be surprised at all by major drawdowns because they no longer have that kind of like, price floor tied to like their mining costs and things like that when they move so quickly.
So why do you think the bond market is rallying the way it is? I mean, because as traders, I think we always look at the bond market and we say, look, if the bond market stays range bound, I typically think that's pretty good for stocks. Companies can see the future of interest rates. But when bond markets start to move relatively quickly, which I think this move has been somewhat quickly, a little bit higher, especially coming off of, good jobs data, you wouldn't expect the bond market to be bid the way it is. In this situation, I'm wondering, what is the why behind the bonds are higher?
My estimate would be risk off conditions broadly. Basically, I think capital is a little bit spooked around the major stock indices. Like I mentioned, all the big free cash flow generators are drying up, and so marginal capital that might be interested in stocks is instead looking and say, well, bonds are not that unattractive for say a multi-month hold at this point. And if the AI disinflationary effects, at least for part of the economy, are real, they perceive bonds as one of the defenses against that. Now, obviously, something like gold would normally be a defense against something like that because the productivity gains we get are concentrated in software, electronics, services, things like that. As money supply keeps growing, it does end up finding its way into assets that we're not very good at making more of, like gold, for example. But with gold already so bid, I think bonds are a natural place for the market to look, at least semi-temporarily.
And then I want to move on to Bitcoin a little bit and just kind of general money flow. So now we have the Fed, stopped QT and kind of have a gradual print is now underway. We've got 40 billion to start, then 20 to 25 billion to start. And you've been very careful to distinguish this from QE. But being that, and you've pointed out a lot that Bitcoin's correlation to global liquidity, now that we kind of have this gradual print underway, why haven't we seen Bitcoin really react, or is it just not enough?
I think so far it's not enough. I think the changes in liquidity here have been modest. Balance sheet increases are only one component of liquidity. There's also, basically what's happening with bank lending and credit, which is actually pretty decent here in the U.S. currently. It's not booming, but it's on the uptrend. We don't really see any major liquidity input from China. Japan's tightening bond market has been, I think, somewhat of a pressure on global liquidity. And then even when you look at global liquidity being decent, Bitcoin has somewhat decoupled from it. We did an analysis last year and found that 83% of the time Bitcoin moves with the measure of global liquidity we were using. 17% of the time it doesn't. Usually that's tied to valuation, which might sound funny to tie into Bitcoin, but basically there are ways to kind of measure whether it's euphoric or whether it's more constrained. We used market value compared to estimated on-chain cost basis, for example, and that was very stretched. Bitcoin often had a down year, even if liquidity was decent. Basically, the coming off of euphoria can override a decent liquidity environment historically with the asset. And also, I think there's an overhang from expectations. People went into this year saying, okay, we have a pro crypto administration. Maybe there's a possibility of a sovereign Bitcoin reserve, which I've been not very optimistic on, and on all these other things. And none of that really materialized in a way that is meaningful for Bitcoin. The treasury companies got overvalued. The Bitcoin accumulating treasury companies got overvalued in mid 2025. And so as their kind of market premiums went away, it dramatically slowed down their Bitcoin purchases. And historically, when you look at how the asset performs, it rarely puts in V-shaped bottoms. It's not like a stock where it can come out with like an earnings release that can really kind of change the data that the traders are working with. And so outside of something like, in March 2020, obviously it benefited from the COVID stimulus like most other assets did. But other than situations like that, it rarely has a V-shaped recovery. And instead, it tends to, when it hits a floor, it tends to grind choppy sideways for quite a while because you have really the only thing that kind of puts in a floor is kind of loosely held coins or coins that are held for the wrong reason gradually gravitate over to very strongly held kind of high conviction holders of the asset. until that really starts to squeeze the available supply, given that there's very low new production. And so bottoms tend to take a while with Bitcoin.
I just want a quick follow up on Bitcoin. Does Bitcoin staying weak, is that telling you anything about the lower part of the K that everyone's talking about? Is the consumer? Is there any signals from that because Bitcoin is not getting a bid?
I think to a degree. I think as a $1 to $2 trillion asset, depending on what its price level is, I wouldn't read too much into its indicator on macro. I would say that retail was largely absent this cycle. And there was no broader kind of altcoin crypto rally either, which is a popular place for retail to enter. One way to read into that is exactly what you said, because the lower end of the K of the economy is not very prosperous right now. There's not a lot of interest or available cash to buy these assets. The other way to put it is just because I've been broadly bearish on the kind of the broader crypto space. I like Bitcoin, I like stable coins for the long term, but I don't really like many other projects in the space. And I think the market's kind of just realizing that that's not the place to be. When they see, just kind of there were a lot of like a VC dumps, for example. They would drum up, interest in an asset, and then, kind of exit themselves, which is not how traditional VC works. They kind of use retail as like exit liquidity. I think this overall retail has got a little bit more savvy with the space. I think AI presents many new things to get into. I'm optimistic on tokenization. Tokenizing other real world assets that make them more tradable in more markets than they otherwise have been. But I think that retail has multiple reasons not to really be present. And the K-shaped economy is, I think, one, but I think it's just too small of an asset to fully read that into it.
And I want to kind of course, talk about a little bit about the energy markets, because I know that you are a longtime follower of the energy markets. We did see kind of equities rally like at the back half of last year, even though oil prices kind of have remained muted. How do you see that trade, and how do you see oil prices? Do you think we've kind of hit a bottom and we're to move higher? Just what does that whole sector look like to you?
Yeah, it's a good question. I've been watching that closely because, like you said, we saw a rally in the energy stocks, but not really in the underlying energy commodities. My read on that is that the market is pricing out the kind of the left tail risk. They are assuming that there's maybe more of a floor in the energy prices, which de-risks to some extent the energy stocks. So it bid those up, even though we haven't really seen an upward move in energy prices. And I think that's fairly right, because I think, AI data centers and things like that, they help put in a floor for natural gas over time. There's just a new demand source that's kind of viewed as pretty structurally growing. We don't really see too much near-term tightness in global energy markets. Longer term, I remain bullish on crude, but no particular view on, say, a 3 to 6 month period. I leave that more to the people that focus on technicals. But that's how I interpret the move. And historically, when I participate in commodities markets for higher stock to flow commodities, like gold and uranium and things like that, I usually just prefer to own the underlying on a risk adjusted basis. But when it comes to lower stock to flow commodities like energy, I historically prefer to own the producers. So I have been happy to see them rally here. But I view that as more as pricing out the risk of further downside, or at least, lower, like traders are lowering their probability assessments of lower downside in energy more so than they're expecting any sort of near-term rally.
I want to follow up with where we started the conversation, where this tape is right now, because I think it's an interesting moment for the tape. Again, bond market's getting bid, energy's getting bid, crypto kind of stuck in a range near off of the recent lows. And you have an equity market that's got a lot of divergence, Lynn. I mean, this is the part where, I'm wondering how long this plays out or what eventually unravels here. You've got a Russell and a Dow that are still up on the year. You've got a NASDAQ that's the weakest market, and the S&P that's down just a little bit. I mean, what's your short to medium term thoughts on what equities do here now that we're starting to see the bond market continue to rally? We're starting to see energy continue to show strength.
So since early November of last year, we've seen the equal weight version of the S&P 500 pretty sharply outperform the market weight version. If you look over decades, it has slightly outperformed. Most of that outperformance was, prior to the 2010s. from the mid 2010s all the way to here in the mid 2020s, we've seen massive outperformance from the market weight version because of all these, hyperscalers, Mag 7. But as we talked about earlier, as the free cash flow dries up among these really huge mega cap companies, I think the market is correctly concerned about those. I mean, software and the Mag 7 have been very big components of the S&P 500. And the software SaaS companies are getting potentially disrupted from all of their seat pricing models. Basically, just way lower cost entrants are putting pressure on them. And then even the companies that are like the Mag 7, like the hyperscalers that are kind of directly involved in AI, it's just like such a competitive field. They have to continually reinvest their profits. Pretty much for the foreseeable future. And so we've actually seen kind of at least a relative rally in some of the more boring parts of the market, the more cash flow generating parts of the market. And while I don't think that ratio keeps trending in a straight line, I am watching pretty closely to see if that November, or late October, early November low in that ratio holds. My base case is that it will for quite a while, and that we'll see kind of a zigzag sideways to up outperformance of more of the equal weight version. A lot of these companies benefit from AI on the cost side, and if they're not in software, their top line revenue is not impacted that much likely from AI, and so they're probably actually some of the beneficiaries here, while the software companies are disrupted in many ways, and as the hyperscalers have to compete so harshly over resources and spending.
Yeah, not the cleanest look for index traders out there, and we'll continue to see how that unfolds. Shai, we've got Lynn here for a couple more minutes. Any final questions?
Yeah, when I talk about your thoughts on the dollar a little bit, you did write a newsletter in December called the so-called Debasement trade. So just kind of an update on that, and a lot of people think dollar's found a bottom and we're moving higher, and what this may or may not mean for other assets.
Yeah, so I think we see global debasement going on, and not even at a particularly accelerated pace right now. Just kind of the point of that article was to say that we've been in a debasement trade for 40 plus years, and I think that continues. It's not really anything special at this current time. We've shifted more toward fiscal dominance, which is a different mechanism for debasement, but it's still debasement all the same. I've been fairly bearish on the dollar relative to Chinese currency, and that I think probably persists. I generally don't view too much into dollar euro because I'm just structurally not that bullish on Europe, even though they are shifting more toward fiscal spending. And Japan, I tend to be a little bit more of a bull on Japan than average. Because they have so many options. Basically, the yen it can be roughly where they want it because they, obviously they're dealing with more fiscal dominance than any other country. They have very high public debt, therefore they have trouble with high interest rates. On the other hand, their private sector is fairly delevered at this point after years of kind of shifting that debt to the public sector. They have a current account surplus. They have very high foreign exchange reserves. So they have a lot of levers they can pull when things get disorderly. If the yen sells off too quickly, they have very large abilities to push back on that. And so the yen can be roughly where they want it to be. And so those that are generally calling for very serious issues out of Japan, I generally push back and I think that's a very longer term issue that plays out for many, many years. And so I think that helps keep the lid on things, let's call, this year.
Lynn, we have to end it there. Can't thank you enough for spending time with us here on NinjaTrader Live this morning.
Thank you.
Thank you so much for joining us.
Thanks for having me.
All right, chat. Go check out what Lynn is doing on X. Like we said, one of the best in the biz.
She's amazing.
Yeah. And, kind of quick thoughts about what we talked about today with Lynn.
So I think it's really interesting what she had to say about the yen, because I know there have been a lot of calls for, Japan's unraveling. They have an aging population. It's kind of the end of the world for them. Yen's going to 200, which people talk about a lot. And so I think she's absolutely right in saying they do have a lot of levers to pull. And, should that ever come to fruition, it will probably take a very long time to happen. And then, of course, totally agree with her on, what she had to say about the energy markets as well. I agree with her. I think over the long term, and we keep talking about that, we will see higher crude prices.
Yeah, I mean, again, the tape has changed, Shai. I mean, I think that's the bottom line, is that the tape has changed a little bit from where we were at the beginning of the year to where we are now. Again, bond market gets bid. Energy continues to outperform. You're now seeing metals go down with stocks. You're seeing the dollar gain strength, and so this tape is setting up for what I think is about to be a busy end of the rest of this quarter and into spring, summer. And because of this change in the tape, in my opinion, I think some people are not positioned probably correctly here. And we're going to see what these indexes start to do over time, because I'm with Lynn. Like, do we think this lasts the whole year? How long does this last? Where does the Russell and Dow keep getting bought on the dip and the NASDAQ continues to lead lower? I will say this until infinity. It doesn't matter. If the NASDAQ isn't leading higher, the S&P's path to higher highs is minimal, if not impossible. I mean, it's just the way it is, right? And so just because the way that the indexes are structured. And so until the NASDAQ works off this weakness, going to be an uphill battle for S&P and NASDAQ. And, if you want to buy the dip, it's still Russell Dow. And we'll see how that plays out. Shai, thank you so much.
Thank you.
All right, next up is TTrades. As usual, each and every Tuesday, we are here with my boy T. Even though we still got Shai on there. Shai's going, hey.
How's it going?
All right. What up, T?
Not much.
I hear you got a haircut.
I did get a haircut, yeah. Had to look a little bit better for the weekend.
What'd you do this weekend?
Just went to dinner.
Just dinner? Yeah.
Yeah.
You're too young to be that boring, man. Let's go. I want to hear some stories, I mean, what's that?
Maybe when I'm back in Naples, I'll go out for another dinner, get some steak. Someone owes me.
Yeah, you do. Well, you got to get back here for it. As usual, everybody. Yeah, as usual, everybody. Tuesdays with T is sponsored by CME Group, where risk meets opportunity. T, let's dive into the charts today. A lot to talk about, T, really across the board, because, again, I think that the markets are in a unique place right now. We're waiting to see what really happens now that you've got a stronger bond market. Crude continues to be strong. You're seeing parts of the market that are showing dominant trends. You're starting to see the dollar gain strength. But there's going to be some divergences in currencies as well. Where do you want to begin today?
Yeah, let's just start out with indices. We'll get that over with, and then we'll go into some of the other stuff. So as you're speaking about, if you're in the Dow, the Russell, those have the strength, but what has the weakness currently, and that is the NASDAQ. And that's what I'd be looking for here, because we did form this lower high. And so I'm just looking for the NASDAQ to trade into this 24,150 level this week, and then we'll see how we react around there. If we just push through that level, then, we have all these lows down here to the left. But that is pretty relevant in terms of if we want to form a low to come back into this consolidation range that we've been in since November. We can do that there. So that's kind of really all I'm looking for in terms of indices. Is I want to look for NASDAQ lower. It is the weakest asset. You can see that if you go take a look at the Dow, right? It is propped up. It's pretty high up here, while the NASDAQ is falling lower.
Yeah, these indexes, T, I got to tell you, it's everyone at the beginning of the year was saying, you're going to have a weak first quarter, which they haven't been wrong about that. Everyone was kind of like playing out what the year was going to look like. Nobody had it in their cards for the bonds to be as strong as they are and for what the metals to do what they have done. And I think we're just about to start getting busy here. And I'm very curious to see what you think about what I talked about with the NASDAQ trying to lead us lower versus what's happening in the Dow and the Russell. I mean, when you're seeing the indexes like this, and I know that you're studying the charts for a long time, and when you see this, like, what's the play? Like, are you just staying away from indexes? Are you focusing just on the weaker one? What's the thought process on it?
Yeah, so when there's a difference in correlations between the markets, so NASDAQ, for instance, lower, YM higher, I actually don't mind that because it just gives me a clue to relative strength. So how I approach it is if I'm still bullish on the indices, well, I'm obviously just going to focus on the strongest one, which would be the Dow Russell. So anything to the upside, I'm just going to be focused on that asset versus if I'm looking to the downside, which I personally am, well, then I'm going to want to focus on NQ as it's the weakest index in the market right now. So personally, I don't really mind the correlation difference. I would just use it to focus on the weaker asset. So for instance, today, you take a look at the Dow, it ran out at its previous day high. NASDAQ is too weak to get up there. So that is presenting an opportunity to trade lower there.
Yeah, I'm with you. I think the market to trade right now is the NASDAQ, and it's to the short side just because they are the market leader. And if they're the weakest, it's the direction I want to be with.
Yeah. And as we talk about, we're not one to try to, chase short the strongest one or long the weakest one. We just like to trade the trend. So that is what we focus on.
And I'm definitely not buying. I'm not buying the NASDAQ because the Dow is stronger. I'll tell you that much.
No. I'm not trying to guess like that. But yeah, let's get into Bitcoin. I know a few people have asked about that. So we will be looking at the spot price here instead of MBT, just because I like to do that sometimes on the higher time frames. But what do we notice here is we did have this nice low as we ran out some previous lows. And this is what I was talking about in this area. If we're going to form a low, I was looking to see if we could form a low here, which we did after running out this little consolidation, but we didn't get a closure through the series of down close candles forming that low. So to me, there's no actual confirmation that this low should hold yet. So that makes me bearish. So I'm still looking for Bitcoin to trade lower here. If we can reach down into this area, I wouldn't mind us going into the 50,000 area. So if we go out to something like the 3-month chart or even the monthly chart, we'll go out there. If we can't hold this area in here, then we're likely to, trade into this swing low here. That's really my only approach. Do we form a low in this area to go higher? Or if not, well, then we're going to fail and go reach for this low.
Yeah. And I think you caught Lyn Alden too talking about Bitcoin. Like Bitcoin doesn't V bottom, she said, like the way that stocks do. And so a lot of times it's a grindy sideways, moving market before it finds a bottom. And that's just what it looks like, T, on the charts. Just does.
Yeah. Yeah, it does it a lot where it will just start to form these failure swings. You can almost see it in here. Forms a bunch of failure swings and it'll just trade higher. I'm not a huge fan of trading stuff like that because I'm used to the indices where I want to see that V-shaped recovery. So, but let's get into metals now. So we'll just go down my list here. So metals, we've just kind of been in this consolidation after this large move at the start of the year. We haven't really done too much. Gold is stronger than silver currently. So if you take a look, gold is propped a lot higher from its monthly low, right? So it's still pretty green on the month versus if you take a look at silver, right? It's red on the month. So it's a lot weaker. So there is that difference in correlation there. So once again, if this is something I was looking to trade short on, I'd be focused on silver. If I was looking to trade long, I'd be focused on gold. But for me, it's not super interesting because it is just more of a consolidation in comparison to the previous month's range, and we've already ran out this previous month's low. So the one thing I'm looking at on silver is if we can hold this low on silver and form a low to go higher, right, because this has already swept out those lows over there, well then I could see that gold could get some strength and trade back up into these highs and possibly reach back up in towards 50% of the wick on the monthly time frame, which we can take a look at what level that would be. That would be right around 52.70. So you can see that on gold if we form a low on silver. And so that's something I'll do with relative strength is if we form a low on the weaker asset, I'm still always going to focus on that strongest asset.
Yeah. I mean, what a tape we have now, man. Last year, gold stocks all going up together. Now gold stocks going down together.
Yeah, they're staying together. But let's take a look at oil now. So this is one we've been watching for a while. We know, with Anthony Crudele on the show, we have to focus on crude oil. So we're just in this consolidation. And so we spoke about it this level in here. I still would like to see price reach for this previous month's high. I don't know if we're going to do it, but really the only way for that to happen, if we're going to hold this low, is to form it right here. So there's really two options for this week for me. We form a low right here, so essentially Monday, we don't really want to see it take out Friday's low, and it trades higher, which doesn't look as likely. Or if we fail this level, then I'm just looking for it to trade into this area here, and then it could reach down here. So it's more of a, I'm not trying to predict what's happening here in oil. It's a consolidation. I'm just going to see, do we break out of this range or do we not break out of this range? And that's really all it is. It's just consolidating once again. Kind of reminds me of November here. So,
yeah. I mean, I see the same thing. I'm waiting to buy any sort of dips that we get in crude. I won't buy into the rallies. You're just not getting paid for buying into rallies. There's no momentum in it, right? But when the pullbacks come, they stabilize. It is reaching back up to at least previous days' highs and such. So, I mean, that's where I've had success in it. And it is. It's a market where if you are patient and you wait for dips and you see what you want to see from the reaction side on support, and if it works, if it holds, the trades have been working. It's not a market you buy into a rally. Like you can't chase crude oil. It's just not showing us that.
Yeah, if you want to trade it, it's just those intraday trades where, for instance, we have a swing low forming. You can trade the next day. And that's really it for me. And I would just be trying to let the wick form of this daily candle, then trade it higher into the previous day high or into a high. I wouldn't really trust it to just break out. January, we have a great month. February, we're just consolidating. So the way it's looking is I would prefer to just wait for something like this until March, because if it's just consolidating, not wanting to go anywhere, well, why would I expect it to go anywhere now? And if it's not going to do that at the beginning of the month.
I'm with you. And Shai has talked about that from seasonality as well. That's the time it picks up. We got a minute left, T. What else you want to get into?
Yeah. So, I mean, we can just skip over RB and HO, but the one thing to note is RB did take out this high, and that's where we start to form a little consolidation and move back into the range on oil. Now, a few people asked for dollar. So a quick dollar analysis. We do have a pretty nice V shape here, right? We get a retracement or a reversal. Just wanted to see how price is reacting here. So all I'm going to be looking for on dollar this week is this high here. If we can break out through this high, then I want to see us trade back up to there. If we don't, then we can trade lower. If we do get a bullish move, we want to focus on the weaker assets. So you can just go through the futures, see which one's the weakest. But for me, that would be pound into these lows down lower and CAD. So if I am trading Forex, I would want to focus on USD CAD or GBP USD. Those would be the focuses. Now, if I'm looking to see dollar be bearish, well, then I want to focus on what is more bullish in the market right now. So you can just look through and find the more bullish ones, or those ones that are propped up, right? Not trading lower right now.
I know we're pretty much out of time, but I got to see you take a look at the yen. It's a market I'm actually starting to look at. I like a dollar strength day on a market that's shown a recent low that I think is pretty good to buy a pullback. Curious what you're seeing there.
Yeah, so yen, it's not super great on this lower time frame here, right? We just had this consolidation. If you notice, we've taken out one side, we come back in. We take out another side, we come back in. So I'm not a huge fan of longing the highs when we're in a consolidation. Now, the one thing to note is we do have this bullish month, right? So we are green on the month, which tells me, yeah, if we want to go trade higher, we can reach for this previous month's high. We can reach for this high over here to the left that's marked out on the indicator. The way that we would do that is we'd want to see what? Expansion. We don't want to see price reverse right here. We don't want to see it just aggressively go back into the range. We'd want to see a consolidation, which we are getting, or a little retracement, form a swing low, and then trade higher, something like that. So that would be more so if what happens. If dollar reverses off of this high, that would be something you could focus on in the yen, right? Because it does have some strength right now, which is, quite rare considering the last year. So it's pretty interesting.
Yep. All right, T. We got to end it there. Thank you, my brother. Always great having you here on Tuesdays, everybody. Go check out what T is doing on his YouTube channel and, of course, what he's doing on X. We go from one of the best macro in the business with Lyn Alden to one of the best technical in the business. One of their shows bringing you that. T, you're the man. Thank you so much.
Yep, see ya.
All right, chat. Man, a lot to kind of go over what this morning was, and I'm not going to go into all of it. If you didn't catch that segment with Lyn Alden, I would definitely go back and watch it, dissecting what's happening. I think the story right now really is the bond markets are getting bid, and why is that happening? And you have the NASDAQ continue to try to lead the indexes lower. We continue to have this divergence where the S&P is caught with a stronger Dow, stronger Russell, and a weaker NASDAQ. And we saw that from the charts with T, and we heard that earlier from the macro with Lynn. And, and the metals are going down with indexes right now. Metals don't look great on the chart, but again, great volatility for traders. I think across the board right now, I think we're getting ready to enter a pretty busy period right now. I think that we've gotten through a lot of this kind of froth at the beginning of the year, and we're seeing the market show us what it really wants: stronger energy, stronger bonds. And we'll see if equities continue to get weaker. It looks like they are going to do that. Quick announcement before I bring in Christian and Merritt. We are going to have what's called March Market Madness, an arena challenge coming here on March 2nd. $20,000 prize pool, 100 winners, $2,000 to the top prize. Check out the link in chat. Go there, sign up, register. These are always fun. Again, March Market Madness Arena. Markets are going to be busy. First week of March, go check out the Arena Challenge. Link is in the chat and also in the description. You don't want to miss that. All right, everybody. It feels like Monday, but it is Tuesday, and Tuesdays is Black Boxes. So let's get ready to trade the open with Merritt Black and Christian trading boxes. Gents, boys.
Boys.
Boys to men. Men.
Oh, man,
boys.
Merritt.
What's going on here?
That beard. What is going on? I mean, his beard is, I mean, that light is showing a lot of gray there. You noticing that, Christian?
It's
Yeah,
here.
Grandpa?
It's here to stay.
Grandpa Black?
Dude,
Is that you?
I mean,
My 40th trip around the sun. It's here.
is today?
No.
Oh, you got to make sure we want to know when your birthday is. Maybe we'll send you a little something.
Okay.
All right. So, guys, interesting tape right now. I feel like the indexes are teetering. You have a metals market that's continued to be volatile, pushing back down, and I think there's more room to go there. Crude oil market is stabilized, although it's back down on the day now. I don't know if some news or something happened there. It was up earlier. It's back down to the mid-62.50s area. Again, you're getting volatility. Bond market is relatively bid. You got a 10-year yield back near right around 4%. Things are moving around, moving and shaking. Merritt, what are you looking at coming into today?
I like the dip in equities actually.
To buy?
I think yes.
Okay.
Look, my edge comes from the edges. If you start way out on the daily, we're in this range. This little dotted line is last year's value high. If you look at where we're at for the month, we're well below VWAP at kind of the -2 standard deviation area, finding a little bid, running a few stops a couple times. So it looks to me like a bottoming process at the lower end of a range. And so I like the risk reward asymmetry here for longs. And so I'm already dabbling here in this NinjaTrader account. I've got some NQ long that I've been in here. Tried to get a little ad earlier, couldn't quite hold it in it right before that news pop. But yeah, I'm long and strong.
Yeah, I mean, again, I look at the indexes and go, if we're going to go higher, the NASDAQ has to lead. And so we'll see right out of the gates today if the NASDAQ does want to take this day and turn it all the way around. You've got Dow back to unchanged on the day. You've got Russell practically unchanged. It's down a little bit. We'll see if the NASDAQ can turn it around. I mean, you're right. If you're looking to trade the edges in a range-bound tape, here we are again. It's just a question of if this is the tape we're going to continue to have. Is it just going to be rangy? We don't know. Again, we don't know.
Time different?
Predict it. Yeah, exactly. Bingo. I've not been doing much in the indexes, but again, if the NASDAQ starts to hold and turn around, I mean, that trade could be, I think the risk reward here, I agree with you, is the best in the NASDAQ from today's perspective. If we do hold, it pulls everything back around because it does, again, look like the other indexes want to go higher, but they're struggling without the NASDAQ. Christian, maybe we'll take a look at what you have and take us into the trend a little bit. Like, what are you seeing?
Yeah, so let me share. I'll just share the morning plan here. We did have a pretty strong breakdown. There was a big change of character last week, which I'll just quickly touch on that on the Qs, on NQ and ES. This was the first time that we actually back tested the breakdown. You can see that for NQ, it was this 400. Let me delete these zones. This 25,400. Every time we would break below it, which was the bottom of this range, we would create a fell breakdown and move back up. Last week was the first time that we back tested it and we rejected away from it. Same structure for ES. So now the question is, are we going to be moving towards November's low, which is right below there or around there's the 200 MA, and we haven't revisited in quite a while. So
I know there's a lot of chatter online that we're going to be making a move towards it, but what needs to happen to move towards that area? You have to have, lower time frame continuation structure. So let's go over that. We had a bounce on Friday. We consolidated after that initial drop, creating a swing lower high, right? You have your low, your swing lower high, and then your attempt at lower prices. What did we do today? We just took out Friday's low or Friday's low. We put in a fell breakdown and now are trying to reclaim this first area of resistance around 650s. So if we can do that, we can go back up to the 700 area, which we did test on a new spike, I think an Iran deal. And if we reclaim that, then we start a move all the way back up to 800, which could lead to a move to 960s, meaning that we can create a daily consolidation, something like this, until we've then pick a direction for the next 1 to 2 day move. So as long as this prior week low, prior day low holds, we can attempt a bounce to this 800 area. If we fail to hold it, reject back down, then we can start moving down towards 500. And then maybe February's low before we consider November's low. For ES, a little bit of the same. We have put in a fell breakdown here. We reclaimed 68.18 and are slowly making our way up to 68.43. But as we can see, this is strong resistance. You can see the interaction here on the left side. We've tested it twice now and rejected. So if we can form some acceptance there, reclaim that, then we reclaim this breakdown and then move back up to 68.68 and possibly back up to this Friday's high, which was 68.93, 6900, big macro bull bear zone. So which will mean that we do continue this daily consolidation of multi-day range. And then if we lose 68.18 prior week low, then we continue lower similar to NQ and look for February lows.
Tell you what, these indexes love messing with everybody, man. You have the S&P and the NASDAQ both take out previous day's lows, get everyone think, oh, it's a lower low. You maybe want to sell the rally, and then they jam it right up your ass.
And Merritt's just waiting.
It's unbelievable.
Gimme.
Yeah, and then you got the Russell and the Dow that didn't make a lower low, and they come, and they're doing what they're doing. The indexes this year have just been choppy, and you really, really, really have to know exactly what you're looking for. If you're just trying to chase trades and you're just going to get clipped. I'd be interested to see what Tracy says about this crude oil market because it did come back. I see people talking about some news.
Well, it's like kind of like what I saw was I'm the official news guy around here, but
a fish.
It was that it was kind of like good news in terms of U.S.-Iran relations, right? It was like they were saying, okay, guys, we're going to play ball. So I guess that's a risk-off move in oil.
Yeah, exactly. And then again, that can only help indexes, not going to hurt them.
Yeah, and with what's going on in bonds, and I King Dollar, look out. I've been really, really bullish the dollar.
Yeah, that dollar, you get strength in the dollar now, and it's really, again, there's ways that you could pull strength into the dollar. You got weakness in metals, they go back to dollars, right? You've got weakness in, global currencies, that money goes back into the dollar, right? And then again, you've got a little bit of a dynamic here that wasn't the case just not too long ago. And again, volatility. Going to be watching you guys throughout the morning. I'm going to hand it over to you guys. Everybody in chat, thank you so much for a great morning. Show a little love for my boys. Let's get a little bit more likes on there. Hit the subscribe button. Never miss an episode of NinjaTrader Live. We're on the path to 200,000. We're at 185,000 subscribers coming in here on this Tuesday morning. Help us get to 200K. And set that alert, that reminder, and this way it pops up when we come up here each and every morning. We've got a lot of cool things coming up. Expansion of network hours. We'll be announcing a new segment soon as well on Sunday night, kind of plugging that. That's going to be pretty cool in addition to what we already have. So a lot of fun things. Guys, I hand it over to you. Have a great week.
You too, brother.
Mr. Black.
How you doing, man?
Good. How's your NQ looking?
Good. I'm I shouldn't be, but I'm a little disappointed. I was trying to work some ads right here in this region, and so for me, it's a compromised position to be adding there because it's out of what I call rhythm. There wasn't enough of a pullback to get involved, so I kept like scratching it at break even. I tried it twice, I believe, in this region. But anyways, I'm in from kind of this is the first in, first out fill from where I was adding, but I was in from lower, so I'm in from overnight low, and it's a great risk reward position. I really like it.
It was 570s. Let's see.
Yeah, somewhere in there. Yeah.
Yeah. Right after that fell breakdown.
Exactly. You know, I love looking for a good stop run and hopping on board.
So you're looking at higher time frame targets then?
This could actually be a swing trade. It really could be. Yeah. So I might campaign around the position, kind of add here and there and scale out and whatnot, but try to leave on kind of this little core and show you guys maybe a good example of that today, come win or lose.
What are you looking at, 25,000 area or higher?
I mean, more like 26,000. Yeah.
Oh, my bad, player.
Big dog. Good morning, chat. How y'all doing?
See what we get. We're a little bit range bound right here. In ES, we have this overnight range between 68.10, 68.43, 45. NQ, you have 570s to 700. We did put NFL breakdown. So if we form some acceptance at 700, I gotta mark this out. I don't have that here. There's a bull bear zone at 700 from this overnight action that we keep rejecting from. So if we can reclaim that, form some acceptance there, then we can see higher prices. And then morning chat. Good morning to everybody. The new week, new opportunity to make it happen.
Look at these 30-minute candles in gold, man. The wildness.
What's gold doing? Just consolidating now. Silver's weaker. Uranium down. Copper down. What's RTY doing? Morning, guys. Don't forget to subscribe, like, all that good stuff. Merritt said he'll shave his beard at 200,000.
Sure.
Merritt said he'll shave it, but shape it as with the NT. One N on one cheek, then a T on the other cheek. He'll rep that at 200,000. He texted me that, so.
Yeah, you know, I did text you one time. You never text me back.
Yeah, I think it was a time zone difference. That's what it was.
I'm sure it was. I'm sure it was. Mm-hmm. Mm-hmm. lost in translation.
Yeah. Wait, Merritt is looking for Merritt's on a long. What do you mean you're on Team Merritt? Oh, reversed long from there. I see.
The blue zones on my screen are just, the middle is VWAP, and then the upper and lower is 1 standard deviation each from VWAP, and then you have 2 standard deviations from VWAP. That's what I refer to as my developing value area, from the -1 to the +1. Yeah, we shaved my beard and you have to glue it to you. I'll mail it to you. You have to glue it to your face.
How's a Merritt beard?
It's custom. I've heard you can, like, I actually had, my roommate did this one time to being funny. You can stick it to your face with like toothpaste, I think works. What are we even talking about here? What are we doing with our lives?
Yeah, what are you talking about?
What are we doing
What are
here?
you talking about? Okay, this just doesn't make sense.
All right. You stalking anything, or are you? What's kind of going to be?
I'm actually in a swing short from Thursday. I took partials. So I caught that move. I have SQQQ. I'm trading on the swing account. I took partials on the move lower on Thursday, and then on the bounce on Friday into 960s, 25,000. I added there, and so I have my stop right above Friday's high.
What is SQQQ? Is that like an inverse
ETF? NASDAQ, triple leverage though. So it's my way of trading your face. It's my way of trading.
It's your way of trading my face?
Listen, what's going on with you and face today, okay?
What's going on? Whoa. What's going on?
You're at the office and you're like, oh, well, my wife's not around. I can be me. So this is your true self, huh?
This is it. This is me. This is it. You're getting inside the kimono here today, guys.
But yeah, I'm actually looking for November's low.
That's cool. I get it, man. I absolutely get that.
But we'll see if we get that or not. We'll see if we even break down. I mean, we did sort of break down last week, and that's what got me in. But again, this market, we keep going back up. So we'll have to see what happens. But as far as day trades here, that was a really good long you got. It was the fail breakdown reversal triggered just as I was getting on the computer. So I missed that. So I need to see some acceptance at 700 to then ride that long. But let's see what we get here.
Exploring CME? Yes, I do. On any and every platform. That's how I look at a top-down approach: yearly, quarterly, monthly, weekly. Toss in some profiling and toss in some order flow, and you've got yourself NADRO.
See, we have 960 of you watching, 285 likes. We can get those likes up. Those are rookie numbers, guys.
I gotta pump those numbers up. Those are rookie numbers.
All right, all right.
I'm sort of neutral to bearish. Let's see, we have 7 minutes to the open.
Talk about a downtrend. Cotton, my goodness.
What's the ticker for that?
CT. It's on ICE. It's not on the CME.
Oh yeah, did it just have a, what was this gap? Contract rollover? Yeah. It's trading like software.
There's a lot of movement going on in a lot of the more obscure, like your typical retail trader markets, like a lot of the softs. Soybean oil is in a sharp uptrend for the year. What did somebody say there? Cocoa. Oh yeah, my goodness. There's a lot of movement over there right now. I don't know why that is. I don't know if it's extreme weather or if it's trade, uncertainty or what's going on there, but there's a lot going on. This is a great time to be a trader.
Because volatility is here.
Yeah. And not just in one place that everyone has to flock to and crowd. It's really opportunities in all over the place.
Looks like it's going to be a slow open or slow into the open. Maybe we get some action then. But both hit resistance. NQ hit the 700, which has been a bull bear zone going back to Thursday's overnight action. So we can reclaim that, then we can move up higher. Merritt will make points on his swing. I'll start losing money on the swing. But if we go lower, Merritt's will lose money, and then I'll be making money. So and then ES hit 43, 45 is that bull bear zone line that has to be reclaimed for higher prices. If not, back down to 68, 15, 18. Yeah, Lucas, a lot of volume recently into these lows and software. But they're what did jump up was security, CrowdStrike, Palo Alto. What song, Lucas? The red and green shaded areas is the EMA cloud between the 20 and the 50 EMA. It's just a visual moving support and resistance. So what? Were they beating their chest, Lucas? This action's not doing much. We have a minute, right? 30 seconds.
30 seconds, yeah. I mean, we've reverted to, kind of VWAP on the session in the queues. So it's Chop City, potential in the open here to go 40 handles, up or down without meaning anything to anybody pretty much other than stopping people out. So.
Let's see what we get.
Little head fake above the short-term balance highs. Then you take out the longs. Suck all the way back up to VWAP.
Yeah.
There you go. More of that until something really changes.
Cyclical strong, so it's helping ES lead. Peck remains weak. Mags red.
Yes, Mr. OSU.
Financial strong. Pretty split tape.
Sellers pressing.
One builder
Buyers
strong.
bringing them back.
Yes, it's trying to reclaim 43. If you can
it's almost
do
like
that.
a megaphone.
For NQ, yes.
NQ, real short term, just over the past 30 minutes. It's like a megaphone, just stopping out more and more people both ways. Just chop. This is such a perfect example of why trade location. If you secure a good trade location, you can ultimately, if between the ears you allow yourself to sit back and not do anything and not react to everything, you secure a good trade location, it's a safer trade to hold. You have to deal with less. It's so critical. And you, Chris, you often do a really, really good job of that.
That's where my comment comes from, where you gotta let the market figure itself out and just let it. After you pick your location, you enter. All right, NQ struggling at 700, that bull bear zone line. ES is trying to reclaim it, but both are strong here now. Let's see if we get follow through.
It's a little tag of VWAP for the week for both of them.
Yeah, semis are weak. It's a pretty big divergent tape so far. Mags are trying to bounce. So if we can hold this 932 low, we can push up.
Yeah, sorry, I don't have a good setup here yet in terms of audio and video. I will get it a little better soon.
Are you traveling?
No, I'm just at the office.
Okay. Yeah, pretty split tape, but we're pushing. So a hold up here above 43 will take ES to 68, sort of 68, 70 area, which is the next point of interest resistance that I see myself. NQ above the 700, you get to 800. So if we're going to, this is follow through from the morning fell breakdown. So you have a good daily low, and now we're most likely looks like going to be creating that daily consolidation I was talking about in the morning plan. Mags are green now. So let's see the reaction we get at 800.
I just took a scale.
Very nice.
I'm also looking at 800. I think 24 8 to 805, 810. That whole just low 800 region is kind of the first spot to get to. So that's why you see me scaling out when we get there. A lot of times it's good to scale out in front of areas, I think, unless it's an area that's really vulnerable to a stop run, which is not what I'm looking at around 800. That's just kind of a multi-time frame developing value area confluent kind of resistance point for us. And we're stretched intraday on the short-term chart here, right? We've ran all the way to the +2, coming off the -2 low of Globex.
All right, NQ's coming into that 800 area. Yes, a little bit weaker now. It needs to get to 68. That's its next resistance here.
Chat, you want to see my favorite office decoration?
Is it a picture of me?
You want to see it? Picture of Chris.
All right, so the 4-hour 9 MA is also reclaiming for ES and NQ, which could be triggering a 9 EMA reversal in that time frame. Amazon strong, Meta. Semis are strong now, off the 9 EMA on the daily. So cyclical is a bit weak. Home builders red. RTY weak. Maybe that's why ES is weaker now versus the NQ. You have semis helping NQ. Above 800 and NQ goes into there's that 880s level, but the big one is this 960, 25,000. It's a raccoon. Did you show it?
What?
Did you show the whatever you have?
Oh, no, I didn't. Would you consider your position safe to go to break even? That's a good question. No, not quite yet. So for me, when I'm using long-term VWAPs in my developing value areas, so when we look at intraday DVA here, well, technically that's not my true average position. My true average position is from lower. But anyways, we'll pretend that it is where it is here for the FIFO method. I prefer LIFO when I'm tracking that kind of stuff. Anywho, average position is from right here at the lower standard deviation. And what is the current market condition of this market? Well, it's still rotational. Yeah, we've had a big run up off the lows. We're still rotational. We're still spending the majority of the rotations inside of the +1 and the -1. Until that changes, I have to keep my stop outside that zone. I have to keep my stop kind of where it is. I don't trail it. Just like I talked about in the open when we were right here. I said, look, this is a middle of DVA around VWAP. It's just a recipe to open, run stops, run stops, run stops, and then pick a direction. Who knows, right? But it's chopping in that zone. So I don't recommend moving or trailing stops when the trade is a rotational play, a mean reversion play, which, by the way, being long from over here, that's what it is. We're trading towards VWAP. Now we're hoping, if you will, that it trends now that we're on the other side of VWAP. But this trade started out as a rotational play. That's very important. So I have different trade management that I'll apply to trending versus rotational mean reversion kind of plays. Like 30 seconds.
We're stuck at this 800 resistance. ES couldn't make it to 68. I'm wondering if we lose that.
See more sellers on the tape. Makes sense after such a run, such a rotation up into 800 as both Chris and I have kind of different methodologies, but when a lot of times it's pretty good levels when we both arrive at the same view from our different methods.
All right, so I took a short in ES. I just took half off at 1R. So my risk is paid for. Going to see if we can get a rotation back down now.
A lot of selling.
So I had for my own trading, I'm going to share this scenario chart that I showed earlier. I shared that if we were able to reclaim the 700 area in NQ, we can push up to 800. That was my next sort of resistance area that I was considering shorts. And we hit it. And then there was a divergence here between that and ES because ES could not make it to its own, quote unquote 800, which was 68 level. We had a lower high against it. I highlighted how cyclicals were now weaker versus tech. And so I went with the one that was relative weaker, ES, and I shorted that into the, quote unquote NQ at 800, but I just used the weaker index so I could be in a instrument that could possibly help me make more for the same risk. And I don't know, I don't know if we'll remain rotational or if we will see new lows. So I'm kind of
you don't know.
Fast. I don't know a lot of things. I'm sorry. I know you know things. You create words, a lot. So I've been taking a little bit faster partials here to pay myself. That was my short idea into that resistance. And I'm glad to see that it paid. All right, took more off here at 2R. I'll hold the rest to see if we can go and maybe come back down to the lows now. But we can just be range bound. This can be a higher low. We'll see. But trade was this initial test at resistance worked well. Yeah. He creates the words that we speak. That is right. Yes, Manny, that was an aggressive short for me. I pretty much took, and Manny, you're in with me, so I think you may know, but I took the trigger of the double inside candle. So we had two 2-minute inside candles here. Well, we had this little consolidation. I just initially took the break of that. It was an aggressive short for me, for sure. Yes, that is right. I just read the rest of your comment. In downtrends, being aggressive pays better because of how fast it tends to go. Absolutely. Because look, if I would have waited for my original higher low, nothing wrong with it, of course, but it would have been down here. Again, nothing wrong with that. I just wanted to be a little bit aggressive because I saw that double contraction, and I know from that comes energy. Am I long? No. I don't know. Maybe you didn't see my chart. I just extended it to the right, so maybe you could see that better. But I walked through the short that
He's swing short and intraday short.
Yeah, you got to extract as much as possible. You know this.
Press those edges, baby.
Hey, no worries, Manny. Pop in whenever you can. That was a good partial by you, though. It was that why we talked about that 800 level.
Yep. There are, I think this is a perfect example of two traders trading well, different views, different trade locations, but you see some overlap in terms of we were both selling at that area, just for different reasons, right?
Yeah.
I sold some, so did you. We just have different net positions.
So all we're doing is building out this range that we have since Thursday. No directional structure yet. Thursday night, Friday. So let's see what happens now. I believe there was also so now we have a really good 4-hour lower high, 4-hour lower low, lower high. Oh, there we go. I can't, did this move? There you go. Why isn't this moving?
I am flat with that action. Now that's a 30-minute candle, guys. Oh, you can't see my charts. It's got
All right, let's see if we go to new lows now. Below, I talk about this a lot, but whenever we're above the daily 9 MA, we're in an uptrend, right? The short-term momentum is to the upside. Whenever we're below it, the short-term momentum is to the downside. So I want to adapt and I flip my trades. Instead of buying pullbacks in an uptrend, I will look to short rallies or bounces into resistance. And that's pretty much the idea here on my trade. We are below the daily 9 MA. I highlighted how last week we had a big change of character where we bounced back into that larger range breakdown, could not reclaim it. I think this was the first time after like 3 or 4 attempts. And then we broke down, which confirmed the daily downtrend. So as long as we can continue, I'll be looking for February lows until we reclaim NQ 25,000 or ES 6,900. And my plan is not to just sit through this trade and see if I can just hold it. So on the 4-hour, let me just talk about that here. we had a wedge consolidation. For those of you who understand my view on trend structure, we broke lower, and this was a lower low. We bounced to create a lower high, and if we can break to new lows, we have continuation of this 4-hour downtrend that will lead into the second lower low, and then possibly that February low target that I'm talking about. Same for NQ. We broke lower, had a bounce to a lower high, a strong bounce, and then lower. So the 4-hour downtrend continues. And I'm right, you know, I acted on a 2-minute entry model to participate in the higher time frame trend. Let's see if we get supported here into the lows. At this point, I can move my stop to break even now. All right, we have new lows for NQ. Yes, just made new lows as well. We can get a reaction here and see if we bounce.
Mark, it's a good question. There is a different dynamic when, you know, from an auction market theory perspective, when a market, the trade location the first time is much better than the trade location if it gives it again the second time, especially the further it went away before it returns to it. And the second time is better than the third time. So the more times you revisit an area that was a good trade location, the quality of that trade location lowers and lowers and lowers. But yeah, the market sent a signal there on the monthly, the developing value for the month into that 800. That was the point at which it says, yeah, for sure, no question, we can remain rotational, work towards a VWAP, you know, as that mean reversion that could have happened, and it got swiftly and sharply rejected from that area. So it's an indication of downtrend type of strength from sellers. So in order for me to reinitiate long, I'll need to see some type of better stabilization, some type of shift on the tape, something like that to start to give me intraday execution confirmation of, yeah, this is back on the table.
Thanks, I know nothing. Hey guys, let's get like it up, subscribe, help the network out. It's all free here on Ninja. I wish I had this when I was starting out, but Merritt didn't want to share back then, so he was saying it's my edge.
Sharing is caring.
But now he, I don't know, a change of heart, you know, he became a family man. So grow a beard, yeah. I'll be there in 10 years.
Move from fur babies to real babies.
Prefer babies to what? Babies?
Make them move from fur babies to real babies.
Yeah, yeah. Yeah, not yet, not yet.
Not yet. Enjoy your dink era. It's a fun era.
It is. I think I need to be less busy to then enter that stage. I can't imagine right now.
You're never ready. Trust me, bro.
Kid.
You're never ready. You never reach some point where you're like, okay, yeah.
I'm ready to welcome another human.
There's nothing better. Let me tell you, man. Incredible.
Ani, you sold a long time ago. Was that part? Look, if that was part of your strategy to say, "Hey, I'm selling, I'm covering here," cool, no worries. You did what you had to do, right? But my strategy is to capture trends as best as possible, as often as possible, which means I'll give up a lot of unrealized gains over time, but also over time, I'll capture more points because I'll hold for a day or two or three. As like the swing that I have on in SQQQ, it started as a day trade, but then I realized the kind of day we were having, and I decided to hold it.
Let them know.
You're about to be grandpa for the first time. We're trying to hold here.
I mean, it's the same. Well, it's not the same, but intraday, we're back down at the -2. It's hard to just keep going down at the -2. So a little bit of a battle. Not a ton of buying. The seller's still in control of the tape from a delta perspective. No change there yet.
All right, let's see what kind of bounce we get, and if this bounce can be a lower high, where we see something like this bounce, create a lower high, maybe back into 68.18, 20s, and then continue lower, or we reclaim that and go back into the range. So you have industrials that are moving lower now. RTY weak. Home builders weak. So cyclicals are still weak versus tech. Semis are weak. I have micros. I only trade micros on the day trade account. Long's in control for now. I mean, it looks like we dropped a lot. Where are they? Show me where they're in control.
Maybe on
long scalps. Okay.
Maybe on the the weekly or monthly bar chart, right? They are firmly in control. All right, here's the response from that lower, really stretched area. I don't see anything yet that says total game changer, total, head fake kind of deal.
Yeah, we got to reclaim this 6818 in ES and then NQ this 570s, which was overnight support. If we can reclaim that, and we go back into range mode, which can eventually push us back up to the top again.
If you look at my longer term chart here, you can see what he's talking about here. It's this ledge, as I would call it. So all this bounce is here is, okay, we got extended on the intraday chart, 2 standard deviations away. Sellers are in control of the tape. A lot of times the market will come back up and most people know this, but come back up and retest an area like this. So that's kind of the short-term line in the sand for sellers firmly in control.
Now to see if we can have follow through lower, but I do see that we can bounce back up. We have a new 4-hour candle that's green. Strong bounce. All right, so we are creating that lower high, meaning we bounce to back test that resistance that needs to be reclaimed. If after this rejection we bounce back up, then we can reclaim it, something like that. For NQ would look something like, where's that? 5 right here. This is that area. So if we reclaim that, we have a low, lower high. You need to continue lower, right? You're now in a downtrend. So instead of a lower low, you get a higher low. You then start to chew through that supply, and then you can break back up. That's the next sequence of events that need to happen in order to go back into the prior range. We can then at that point traverse all the way back up to the top if we're not going to have followed through lower.
Good morning, Heats. ES order flow into the low, I see a very interesting sequence, actually. I see a lack of selling as we near the low. And then I see the market got him. Finally, you see this big push from selling, but guess what? That's at the very end of the move. And then a sharp reversal in buying. We're not seeing that in the NASDAQ. So that is I don't like looking at one market to make judgments about another. I very much dislike that, in fact, but it is interesting to see the difference there. No, it doesn't. Got some desk traders having a great day today. Congrats, guys.
Did I DCA into the short? No, I do not do that.
No, it was perfectly timed. Are there ever situations where you'll piece into something over a period?
Where I'll what?
Where you'll either DCA or just piece into something regardless if it's a round entry or slightly losing or whatever. Do you ever do that in any situation?
Not really.
It's a very, very, very rare thing for me where in fact, I did it on the stream. I think it was week before last, where it ended up being where I only got the first piece on, but I said that I was prepared to piece into it. But it just started working with the first piece, which, by the way, is part of the risk of doing that. You end up with doing that. You oftentimes guarantee that for your losers, you will be in your largest position, and for a fair number of your winners, you'll be in your smallest position if that's a strategy. But you greatly increase the win percent, even though you're hurting risk reward that way.
I would rather put on the position and then add to it at a logical place versus DCAing.
Well, as a DCAer could argue that they are adding at logical places.
Yeah, that would be a very short time window though, right? Versus waiting for something else to happen. I guess the way I'm seeing it is like when I took that swing short, I added the second day on the bounce versus within like a 30-minute window trying to DCA around the same entry. We are in the most important period of intraday trading. Waiting for trading plans to develop and engage. Yeah. That's what I like to do, guys. I just create the plan and then I trade the plan. The plan's a much better trader than me, that's for sure. But as long as I stick to it, I can do well over time.
Plan the
You have a
trade,
target
trade the plan.
at 67.30. What is my target? For ES, I'm first looking for February lows.
Yeah, DCA's it does mean dollar cost averaging. It's typically 9 times out of 10 when someone talks about doing that, or people who are doing that, they're adding to losing trades. That's typically, it's a amateur, super high risk tactic, refusing to take a loss tactic, where you get in, it's going against you, you add to it in hopes that it at least bounces enough to get you out of break even or something. That is the amateur, wrong, terrible thing to do. There is absolutely a place for adding to trades that are losing on purpose and structuring your risk in a way where it makes sense, where you've planned it out. It's a part of your process. That's great. It could be done. It's fine. There's nothing inherently wrong with operating that way. But yes, as Full Gluten is saying in the chat, the way most retail traders approach it is, you know, a big problem. It's a terrible, terrible thing to do because it's not planned out. It's not smart risk management. It's you know, borderline YOLOing, refusing to take a loss, just terrible kind of thing, like blow your account when it doesn't work. That hopium kind of thing. Again, I did it or had planned to do it. I think it was week before last on this stream. It's not reckless, you know, by nature. There's a way to do it. And so I believe I said I'm going to piece out this trade into thirds, and I got into the first third, and the trade just worked. I was prepared to kind of the only times you'll see me do that is when the narrative is strong enough. But there's a reason why I think being precise is really tough in a region. Most times I'll get in, I'll stop out, I'll look to re-enter lower or whatever if I'm getting long. Sometimes it just makes a little bit more sense. Maybe I'm wanting to be a little bit more hands-off and not as active, to just say, all right, I'm going to piece into this over this range. If it gets below that range, I'm out, and I know what my risk is, and I know what I'm doing with that. Very, very different than the gambler DCA type of thing.
All right, I took off more around 5R, and now I have 2 contracts left. While I had to go clean up puppy poop. And looks like we are going to be reclaiming that breakdown area, which, remember, I talked about. We have the low, lower high, breakdown attempt, no new low. And guess what? We're now reversing back up. So reclaim 18, we push back up into the range and bounce, maybe traverse all the way back up. Same thing for NQ.
They haven't taken it yet, man. Yeah, NQ is
I know. They're right at it.
Yeah.
I think they will.
You think they will in the future? How do you know that?
See?
Oh, there you go.
Told you.
Not yet. No acceptance yet. Just a peek. No acceptance. But that was a lot of buying on the tape just then.
Yeah, we can go all the way back up. So I'm glad it took more off. And then I'll manage the second one to see if we are able to reclaim it and hold, or maybe, but this is now what, I think 10% of my original size. No, I still have that swing. Yeah, it was a good reversal.
Look at these two 30-minute candles right here.
I think everybody does, Shap. I mean, from a trend structure perspective, you had sort of, I don't want to say confirmation, but you had the lower low, lower high, and then move to a new lower low. When that doesn't happen, that is price literally, right? Price is the most factual indicator on the chart. It is confirming a higher low. When we reclaim the 9MA, we confirm that the higher low has been put in, and then we trigger a move back up. So understanding that trend sequence sort of give you a heads up at the possible reclaim of that zone that we needed to get above. If I had no trade, then that could have been a good long location. But I'll probably close this soon if we fail to reject from here. Maybe put in like a swing lower high, right? Something like this. Swing lower high, and then maybe reject back down, and then work our way back down once again. Like a fell breakdown above this 68.18. That would be a good place to move stop to. But if we reclaim that, then I do think we're going to see the other side of the range, and therefore my trade will be done. So if my initial thought was to short to lower lows, will you close this now at retest and go long, or do you keep the mindset this is more supply to short? So for example, if we lose 68.18, then I know that this push higher was a failed breakout, like a failed reclaim, because we didn't form acceptance, right? And then that means that we move back down here. And then at that point, consolidation below the zone again can confirm additional move lower, maybe in the next hour or so. If that happens, and there's no reason to close my short because price structure is telling me that this was a failed push above this 68.18 area. If we hold it and we start to create a higher low, form some acceptance, then we push back up. Sure, I can engage in a long there, but maybe what's more interesting to me is a long up here into 68.60s if we form acceptance at the top of the range, and then go up to 68.90, 6900. Yeah, if then and else. It's literally how I trade. So if this is a failed breakout, then we can go to new lows, or else we put in a higher low here and continue the 9 MA uptrend that we're now attempting to start, right? The 9 MA downtrend from the highs ended, lower low, lower high, higher low. Now we have a higher high. Can we put in a higher low and bounce? If not, then we triggered a failed breakout. The higher low here fails, and we move back down to new lows. And the higher time from downtrend continues. How am I? Call me a hindsight trader? I'm trading live. How?
You shorted the high in hindsight, bro. Stop doing that.
What's going on here?
What's happening?
It's so weird. Yeah, that competition sounds fun. 20,000 price pool, guys. Money, money. What? Okay, so we remember that we started this new 9 MA uptrend. So you have your higher high, and then you come back to backtest the 9 MA to create a higher low. From there, if we are to hold, we create a higher low and then continue higher. Failure to create the higher low means this new 9 MA uptrend attempt will fail, and we can traverse now to the other side of this little micro range, which we're now doing. So as of now, the higher time frame move lower continues, and I can then now move my stop above this swing high, which would put my stop on the rest around the 1.5R, and then I can trail my position lower. Because then if we do reclaim that high, we do go back up and then eventually reclaim this last high, then now we have confirmation on the higher time frame that we're going to be pushing back up here. And then at that point, there's no reason for me to keep my stop at break even, because price structure is telling me something. And I'd rather just wait it out. So let's see how low I can trail this the rest of this trade, or if we're just going to be range bound. But while we do that, guys, we have 1,200 of you, 447. I know we can get to 600 likes here.
I just went long here. Into Qs.
For the swing again, or a day trade?
Let's call it a day trade. Might be like
undecided yet.
It starts out as a day trade. We'll see how
I
it
like
unfolds.
those.
Yeah. I don't love the tape here, but for me, this market showed that it is indeed still rotational, as it has been all day. A little attempt at a downtrend right here and then failure. So now this is just another classic entry style for me with my standard deviations and whatnot.
Merritt, do you like trading in office with other traders, or you like solo?
It's both are good. It's all good. It's hard to beat a good physical environment around other people approaching the craft.
you would want your own pod with same sort of skill level?
No, a varying skill level is a good environment because it forces some of the more senior guys to teach and try to explain process, and they have to explain why they did things when the junior guys ask them, and stuff like that. It's good. All right, I gotta focus here.
Oh, my bad.
You're good.
My bad, chat.
Just not loving the tape. I'm gonna scratch out of it.
Ooh, Tesla, big drop.
Re-entered. Just trying to work this a little precisely here with some looking for the swing low here, trying to find it. It's a NinjaTrader Order Flow Plus add-on. Order flow volume weighted average price. Scratched it again at the low. Order flow VWAP.
See if we can make new lows now. Very weak.
Yep, could be.
Hey, great job, Logan.
It gets easier. It's like working out. You flex that muscle holding, and it gets a little easier and a little easier. And then you eventually get to like Chris and I, where you hold trades. You literally are able to not care. Not that we're perfect, not that we have everything figured out, but you really can get there. And I remember my first crude oil trade that I held for a whole dollar. It was I remember writing in my journal about it and what a big win that was. So congratulations. It is a big win. Keep flexing that muscle. Keep getting better. And Shap Cap, why are you mad, bro? Why are you mad?
All right, new lows here. Beautiful. So now on the next bounce attempt, what I'm looking for is another lower high, meaning maybe a bounce, create a lower high, and then reject lower. If so, then I can move my stop once again to that lower high as I now trail the recent breakdown. But we'll see how that unfolds.
Sequences where the market goes all the way to VWAP intraday, and then, which to me is a measure, a read of rotational behavior, and then comes and tests extremes, but then continues a trend. Those are sequences where I tend to lose money by design. I think not all, but I think most good traders can tell you sequences and situations in which they tend to underperform, not as a person, but as a strategy. And all strategies have that. So it's important to be okay with that. A lot of times newer traders, they're just not okay with losing. They're not okay with losing sequences or things like that. And you talk to a more mature trader and they understand things are a little different.
Where are you? Somebody's asking, where are you, Merritt? Where are you? I'm so sorry.
Nashville.
I think he wants the address. Yes, once it hit the lows, the profit on extension of your short is equal to the loss should this reverse. Well, I wouldn't lose on this trade anymore, but you have a hard time not selling at the point. So see, that means that I'm looking at the higher time frame move and I'm looking to participate in that. So I'm okay with price reversing back up on my
He's already scaled out as well to pay himself as the market makes profits available to him.
So I'm okay letting it bounce back up and stopping me out at 2R.
I'm taking another shot long here.
Get it. Pay him, Mr. Market. So we hit that 67.93 zone in ES, which was the next target. Below here, we go to February's low. No, not yet. Well, yeah, on the way there. But before that, we have a 67, 68, 71, which I think is December's low, if I have that right. No, December's low would be next in ES if we continue lower. For NQ, we are at 500 area, failed to reclaim 500. We see 350s and then February's low. So I'll be looking to trade towards that area as long as we're below the daily 9 MA. This market's finally rolling over. And I'm looking to be in that.
Where are you? All right, tape, tell me where value is. Tell me where is value and where is it shifting? I don't use POCs personally.
I'm right here. I don't think he gets that joke, guys.
POCs, I'm right here. I don't get it. Is that an acronym for something I should know?
Yeah, chat knows.
POCs.
He's him.
POS?
Yeah. No, read the chat.
Oh. Wait, but you don't use the O in acronyms. Why isn't it just a PC?
Don't you dare call me a PC.
It's not PC to call you a PC. Include my O, please.
I'm the DEI hire.
All right, we're seeing buyers show up. We really are. Oh, somebody earlier asked, what is rotational? Rotational is just a different word for a market that's range bound, sideways, not trending. All right, I don't want to see us knock on the door of 458 area again, so that's where my stop is, right at those lows of the candles here. Do you see on the delta, we got some really nice buying coming in. We'll see if we remain rotational.
Yeah, you have a higher low in delta versus price and NQ.
Good point, Damons. Good point. Oh, they're coming to get me.
No bounce yet for me to make any adjustments to my stop.
And you got a nice VWAP projection on that.
Yeah, lower high here and then lower to move it. But until then, I'm going to continue to follow this trend. 24,155. Well, I'm looking for November's low. What level was that? 23,008 something. But first, we've got to get to December's low, 242, 243. So I'm looking for that. Unless we reclaim 25,000. And then no big bounce today for me to add to my swing short.
Looks like a bit of a passive seller showing up, absorbing these buyers. If we come down at these lows again, I fully expect us to see a decent crack.
Thanks, Jacob. Whoa, we're a great couple? Oh, okay. Never considered him that way.
Be honest.
Good looking guy, don't get me wrong.
Be honest.
That's right, Tape. Chris, you're sure you've covered your trade by taking half at the low, but if you are stopped out at 68.31, you cut your profit in half on the ES. What prevented you from adding to the short position? I don't add to my trades. Maybe that's probably the reason why. I mean, I would 10% of the time I do, but that's a very specific structure. Yeah, but the profit on this runner will be cut in half. It's a runner though. I don't, I care about it, but I don't care about it by seeing the runner profit get cut in half when it's 10% of the size that I put on. So I give back 5% of my gains.
There are no free lunches in trading. For every profit you book, you cut reward off at the knees. For every profit you don't book, you leave exposure, you leave risk on. There's no free lunch, guys. Trade management is a style choice. Who do you want to be as a trader? Do you want to only take everything off when direct momentum wanes? Fine. Focus on that. Be an expert at that. Become a master at that. You want to be more like Chris, where you really give stuff room and let it come all the way back and you're fine with that? Fantastic. Become an expert at that. I think Chris and I are both somewhat of a hybrid where we kind of pay ourselves along the way, then we'll leave core positions on. Obviously, Chris more swing trader centric than I am. But yeah, it's really important to understand that trade management is a choice. It's you developing a style and a niche more so than this is right, this is wrong. It's really not.
Everything he said.
I will probably look to scale some if we get back into that same area here that we talked about, like that inflection. $580.
So look at what triggered that reversal, guys. We started a new 90-day downtrend here, right? We have a low, lower high into it, second minor lower low, and then we reclaim the 90-day. The 90-day downtrend ends, and we trigger a new higher high, higher low sequence. So it's the structure that I follow along the 90-day is what gives a good or provides clarity to the change in structure, which is a little bit late than what someone like Merritt's looking at, where he can see the change in tape before that confirmation on price.
You saw it earlier. I don't know if that was luck or skill. I don't know which one that was. That was funny though. All right, my finger's on the trigger here to scale.
So I'm looking here.
Sellers showing up on the delta.
Yeah, the 2-minute. If we can create a new lower high here and then reject back down, I'll move my stop down now to that next lower high and keep trailing it lower.
If we come down to those lows a day again, though, it is going to rip some faces off, I think. I've actually never read Best Loser Wins, so I can't comment on that. I am a huge believer in that. In order to become a winner, first you must become a great loser. I firmly believe that.
It's called the EMA cloud. This green and red cloud. Yeah, EMA cloud. It's between the 20 EMA and the 50. All right, so a little bit of rejection here on this bounce. If we fail to produce a higher low from here, meaning high, higher low back into the 9 MA to hold and then push out, that means we can go back down to lows. If we do hold, then we can climb back up. And then at that point, I can manage my trade, the partial a little bit better. And then I am considering bringing it down once again. Now into from 2R into 3R. And it's still, even though I'm letting price bounce back up, if I get stopped out at 3R on the runner, I still see that as like successful trade.
Yep. There was a conversation going in the old Apteros Discord channel lately. I forget the initial question, but somebody was asking like, if 5 to 10R a month was good or something. And I was like,
absolutely,
guys, are you kidding me? I said, in fact, what I said was, what was the track record of Medallion Fund, right? What was that average annual rate of return? We'll just keep the math simple. It was close to 70%, if I recall. Yeah. It was like 68%, I think. And granted, that's net of fees or what, but are you kidding me? That's just such a common thing I see where people think you got to make 20R a month to be any good. That's it. If you can make 5R a month, you are elite. Elite. And I think if more people watching this right now would internalize that, and it almost feels like lowering the bar, right? It feels like it's okay to only make 3R on the runner when it turns around and comes and gets me. You know what I mean? I think it would be a healthy mental shift for a lot of viewers at home.
And guys, that 4R can be significantly more than somebody with 100R. The value, the R, to me, doesn't matter because that can be 10,000 per R, 500 per R. You work your way up over time, your size increases because you're risking a consistent percentage of your account. So eventually, I mean, that's how I came up. Your R becomes bigger.
Someone was asking in the chat, what is R or what is 5R? R is just how much you're risking per trade on a dollar basis. So you kind of normalize that, and then you can base everything else around that. So if you're risking $500 a trade, and you make 2,000 on the trade, well, you now know that's a 4R, average flat to flat winner. You can look at your stats in terms of units of R, those kind of things.
Thanks, Nando.
Yeah, it's always fun to see. I've only taken longs in NQ over the past couple hours. Chris has only taken shorts in NQ, and we're both up on the session. It's pretty cool.
I don't see how more, maybe Merritt knows, but I don't see how more contracts can improve your strategy. Contracts are a result
one of the biggest
of
myths out there.
Contracts are a result of you growing the account or not.
If I could just trade bigger, it only makes your life harder. It does not help. Now, granted, going from only being able to trade a one lot to having 2 or 3 lots where you can scale, that is a threshold that matters. Being able to scale out can be very, very beneficial if you want for trading, for emotional stability during the trade. But then any size past that, it doesn't help you. It doesn't make trading easier. But you see that a lot. People think it does.
Do we have acceptance here? Somebody's asking. No, we just back tested that 68.18 zone, which is what we have to reclaim to see higher. So we have a good bounce into it, and now we're just consolidating right under it. If we can hold here more, then eventually we're right now chewing through that supply. But a failure to reject back down to the lows and we create a higher low here now means we can push up.
Morning.
Hey, morning.
Hey, fellas.
Chris, you got the greatest short of all time, man.
Volatile week here, guys.
I know. I've been writing that all day.
That's the trade of the day, but I couldn't get in because my account's got some issues right now. I'm waiting for Mike to fix it for me. But dude, man, that was the best trade of the day for sure. The easiest, I guess I could say.
You still can't trade right now?
Yeah, it's not working yet. I'm waiting for the text.
Can you trade, Jack?
Yeah, I was actually long going into the open and caught that up move and then sold this short here at 10.15. And then I actually I covered NASDAQ, didn't cover ES, still short the ES, and then I just re-entered NQ. So I'm looking for new lows. I got some pretty important levels.
Is he muted? Is that just me?
We can't hear you.
Quiet.
Hold on. How about now?
There we go.
I was like, I forgot my microphone is floating above my head. Usually it's in my face, so I remove it when I'm not streaming. But yeah, so I got, I was long going to the open, caught that move up. Didn't take as much as I should have, and then shorted around that 10.15. That first pop covered NQ, didn't cover the ES, re-added NQ just right here. But I have some pretty important levels below us. 67.75 in the ES is something I've been waiting for a very long time. We've only traded it in the extended session. We haven't traded it during the cash session. So I will move this mic around a bit. I'm new looking for that here today. 67.75 and 24,424s in the NQ. If those can trade today, I'm going to be interested in seeing what we do off of them. But yeah,
I'm still holding from 24,496, and I think it has the potential to develop into a swing long. So I'll stay in the minority long camp here in the crew, and we'll see how it goes.
You know, I'm a fan of the longs. Maybe we're going to I just want to see one more low, but I tell you what, if we break this action, it being Monday of this week and kind of everybody looking at that news, 3-day weekend, Friday, we had that news come out and nothing really happened to that. So I do think the market's going to pick a direction by the end of the week that's going to be pretty significant. I might be joining you on that long later today.
Well, regardless, good luck to you, fellas.
Yeah, good luck. Enjoy your session.
Thank you.
Chris, it was fun, man. I don't know if you guys saw. Chris was shorting the highs. I've been buying the lows, and we've been making some points in between. So it's been fun.
Yeah, we meet in the middle and hug it out.
I love that.
All right. All right, guys. Chat. You guys all take care.
Yeah. Bye, chat.
Toodles.
Turn my crosshairs on for you guys. You're not allowed to say toodles. Don't do that again.
It's gotta add a little flavor.
Hello. XY, I feel like I haven't been on with you in a while.
Yeah, it feels like
a week or so.
maybe 2 weeks.
Yeah.
Which is kind of forever in this game.
That is forever.
In the streaming game, yeah.
In the streaming game. It's eternities. Oh man, I know you would have loved this action this morning though. I mean, I had, still the NASDAQ. I mean, my ATR bars, I got some codes transferred over to Ninja here, which I'm excited to be able to share. But like this risk calculator code I have at the top, I'm going to be giving away for free. That's just, it takes the average true range in the last 10 bars and multiplies it by 1.5. So I'm on a 1 minute chart in the, this is an MNQ. But that on the 1 minute chart, that's reading 50. That's some extreme volatility. So you definitely need to be, in my opinion, a little wider with the stops here, a little smaller with the size. Otherwise you can get worked in this type of moving. I mean, we have bars this morning, 150 points, a couple 150.5 minute bars in the NASDAQ.
Yeah, the first offer, when they really pulled it back and before they made a new low, that one just ran. That would have been my trade there. Super, super simple. Something I do like lately. It feels like every day. The market sets it up and then, yeah, just maybe 5-10 minutes they made a new low. Yeah, would have been nice, but it's all right.
Would have been nice. They got you. They're shunning you out. They're tired of you taking the money. They're like, we got to burn this guy's account down. Give him some software issues.
I knew I was in trouble when I looked outside and saw the van.
The van. Yeah, getting some momentum back to the upside. So Merritt could have been. Could be swinging for highs. We're getting back to the open here in the NASDAQ. 24,660s is roughly right around the open. So if we start squeezing and staying above that, new highs of the day are in play for sure here as we, don't have really any continuation of selling below Friday's low at this point in time. Let's see here. I did want to change this to a 5.
Mia 418. No, they don't. I'm a scalper, so I don't need all time frames from like 1 minute all the way to 1 hour to align. So it's because I'm scalping though. I think if you're looking for longer holds, aligning would definitely help. But for me, I would say if I'm looking to get into a trade and up to like the 5 minute aligns, I think I'm already happy with that. If they give me 15 minute as well, I'm even more happy with that. Yeah, they don't all have to align because I am a scalper. So if I'm trying to grab, say, a reversal trade, it's probably not going to align with like really high time frames. I do look for further alignment after my entries though, because it does give opportunity to maybe look for some ads because it's like more confirmation as it's going. But yeah, very nuanced, but that's just how it is when you're a scalper.
What is the average hold time of your trade, XY? Do you ever look at that?
Last minute? Not last minute. Last week, I was looking at it. It was about 3 minutes.
Oh, wow.
Yeah. So if I'm still holding after a while, like I'm probably no more than half my position is left at that point. And I would say probably if it's been like more than 8 minutes, I'm probably down to 1 or 2. 3 if I really think it's such a great setup. But yeah, generally I'm in and out pretty quickly.
Big trade it, don't date it kind of guy.
Yeah. Yeah.
In and out.
Honestly,
man.
dating the market just gives me pain. Even when it's working in my favor, when it's just kind of like stalling, I'm in pain.
Yeah. If it's not moving.
Commitment issues.
Yeah, I feel you.
Yeah, Mia, T's strategy, his approach to execution is way different than mine. Although we align in like price action, We certainly do. He's definitely going for larger moves too, wider risk, larger moves, more of a broader idea. For me, if I think that I've got like it's about to do something for the next 5 minutes and I can really capitalize, I'm going to do so.
Yeah, being aware of like the time frame you're trading and what you need to see, because when you're, I mean, like you said, the average hold time is 3 minutes. You're not really caring about the higher time frame because, I mean, especially on a day like today, you could have taken great trades to the long side or the short side, and higher time frame alignment on a day like today. I mean, Friday I would argue we've been trending down out of these lows, but if you look at the biggest move here. That pre-market move was huge. This move out of lows is turning out to be pretty large as well. We're up, 200 points here in 20 minutes? I mean, we are swinging today. When I start seeing this increase in two-sided volatility, it makes me think we're due for a turn. But you definitely don't need higher time frame alignment to trade either side of today's action here.
Yeah, I can't say I'm not shocked by this up move right now.
Yeah, so one of these indicators I have on my screen, which is I refer to it often, but finally got some software transferred over the weekend, 3-day weekend. I did some work, but these blue lines, guys, that you're going to be seeing on my screen moving forward, that is the midpoint of the prior day, and that is really where we found rejection here in both the ES and NQs today. That's a 24,786 in the NQ, and then 68.53 quarters. So that is the middle, and that's actually a Friday's range. I'm not, that's not calculating the holiday. So just so you're aware, that's going to be like my battle zone moving forward for the day. Like we've clearly seen some sellers below that, but now as we work our way back up, if the second half of the day is looking like momentum above those two levels, that's going to be something important to pay attention to because we're really at the bottom of daily ranges here. And we are seeing a turn out of this failure to continue lower. And I believe the YM is above that midpoint for the day. And I think the Russell is right at it. So the Russell's right at that midpoint. So if all four indexes go back above Friday's mid, I think you're going to want to be looking only to the long side here. I just put a couple limits in, but I'll be dragging them up as we move higher. Trying to get a piece of the action.
No. The Friday low is based off of cash close. So I don't know what time zone you're in, but cash close. An hour before they shut you off.
Yeah, that's the difficulty when you're speaking to traders is everybody's on a different time zone. I'm not even on East Coast time, but I always just use East Coast time. Like my computer's on East Coast time.
I do my best, but I keep forgetting I didn't want to say 1 p.m. Pacific. I was like, what is it in Eastern? I was like, you know what? Forget it. It's their problem. It's 1 p.m. Pacific.
It's their problem. Edge alert, Jim, cold, IB breakout report. Interesting. I guess there's no IB breakout yet. I have not looked at gold. When we're moving this fast in these indexes, I tend to trade other markets a whole lot less.
We actually might get a double break on indexes. This move up is kind of crazy.
No, this is fast. Like I had some limits hoping we'd get a little bit of a pullback, but man, we're getting towards the extended area of what I want to see. I mean, I'll move one limit up, but I don't like going long both markets here in an extremely aggressive move. I'm going to move my ES up to 30s. We could just rally 5 bars past the break, which would take us out. Let's see, we started that rally at the rally above the 1025 high. I would count this as the first bar at 10:00. That'd be till 11:30 if we have a 25 minute time cycle rally. Mia, if you don't worry about higher time frames, how can you protect yourself about catching knives? So I will occasionally catch a knife. In a sense of like you don't really know you're catching a knife on the first try, but you kind of know you're catching it on the second try. In a sense of like you're gonna take stop outs in trading in general, but it's when you take multiple stop outs in the same direction that I consider it to be knife catching.
I think that the answer there is very convoluted because I wouldn't say that we never meant to say that we don't worry too much about high time frame. That would be extremely foolish. The question was, do they all have to align? That's different than I don't care about high time frame. If you're catching a knife, if the market's sliding, you have to be looking at high time frame because if the market's moving like that, you need to know where you're going. You're going to look to high time frame. If I would hope so. If you're trying to catch a knife or you've got an area where you're looking to do that, it's a high time frame area. I would hope. So, chicken or the egg. A knife catch would be when the market's really moving one way. You would generally only pick that spot based on a higher time frame, I would hope. So in that situation, we already do very much care about high time frame. So there is a key difference between do all time frames have to align for you to take a trade versus I don't care about high time frame much. Two very different things. So I'm always looking at high time frame, yes. So if it's going to an area of interest on a high time frame and I'm looking at 1 hour, I don't need to see a 1 hour bar close once it's there to get in the trade, right? But that would be the idea of confirmation, to wait for that 1 hour bar. I don't have that kind of time. I could be in and out 3 trades. My computer's off by the time someone waits for an hour bar to close. So that's my approach. And that's why I don't need all the time frames to align because I simply don't have the time. I can get this off. I can get paid 4 times over while someone's waiting for 1 and just turn off the charts. So
yeah, another thing to always consider is like if you are aligning all time frames, like what is your true definition of a trend? Like, does the prior day need to close bullish to be considered? Like everybody's going to have a different definition of aligning time frames.
yeah, so the trader who's waiting for that 1 hour close, they're probably going to enter that trade based on the 1 hour and hold it for like 20 times as long as I did and get a bigger, way bigger move, right? But it's a whole different trading process, different trading style. For me, as someone who gets paid last week on an average of 3 minutes of a hold per contract, doing something for 1 hour doesn't pay me any more than just 3 minutes. So if I'm holding for around 3 to 10 minutes, why do I care, what this whole hour is going to do? I don't get paid for that. So it's kind of like, as I always say, as a day, not even just a day trader, as a day trader scalper, I don't get paid to know what the market's going to do tomorrow. So I just don't care.
Man,
I don't spend my energy trying to find that out because I don't get paid for it. I get paid to know what it's going to do in the next 5, 10, 15 hour, maybe 2. Even then, like 2 hours is, I would hope last week I didn't trade for longer than like half an hour on any given day.
This is a fat rip right here. Jeez. We are above the mid now in all indexes. The NQ is the last one to get to the mid. You can see it just traded that 787 there on my screen. So we are pushing above the mid. I think knife catching is now, what's the opposite of catching a falling knife? I'm not sure. Is there like
I always just say stepping in front of a train.
There you go. All right. It's train jumping, or like, would you be jumping in front of a train here?
It seems like it, yeah. But it's the weekly open. I mean, wouldn't be surprised if they offer this. I think the trade setups now are way harder than what we had before we got on stream. They're, for me at least. The ones before were way easier to execute and just take. But now, after the market's made so many more decisions, it's trickier for sure.
They're making it harder for us. They're like, we're going to put XYZ and Jack on it, just give them a more difficult market.
Yeah. Do all the cool stuff, the more simple stuff before they get on.
Yeah, then they like up the hardness level of
The
game.
slider.
Yeah. increase difficulty.
Difficulty nightmare.
Yep.
Yeah, my approach is I don't know another word other than like narrow. I try to be very narrow in my risk. So it's totally different than, you trade off pure price action and then like your stop has to be 80 points because it's what makes sense, right? But I just can't do that. So
Riding a rocket. I don't know about that one.
I think riding a rocket is when you're in line with the move, if anything.
Yeah.
But if you're fading it, like reverse knife catch, it's like you're just running. To me, it's like you're running in front of a train.
To infinity and beyond. I have to put on a Buzz Lightyear helmet with this move right here. Just don't, whatever you do, just market order because you see there's reactionary trading and there's like plan trading. Are you just like reacting to the price or are you like still planning it out? You have to like psychologically think like where are you? Are you simply just like, oh, I need to get in without any plan because you are emotionally tied to something you're seeing on your screen? Or are you trying to play, like here, like I'm looking at this market going, okay, well, clearly seems a little stronger. As XY mentioned, we're right back at the weekly open. We are at some levels that I think should get an offer. However, I want to be still buying below us just because the strength of that move. And then for me, the area, the zone of which we've rallied from is important. I was hoping we'd get a little bit lower, get an exact touch of my levels, but we didn't. So I'm going to give this one shot where I think we should either go straight up or not at all kind of thing. And buy some, I got some limits set here, 24,711 for the NQs and 68.43 half for the ES. So we'll see if we can pull back.
I had been trading my AMC strategy. I know nothing. That sounds great, man. Yeah, I mean, I'm glad it helps. Auction market theory is auction market theory, so. Oh, yeah, is it Friday? Maybe, okay, maybe this one's different. Maybe this is like the close and not cash. Yeah, I do have two different ones on two different platforms. Yeah, this one's probably the close. But it is higher, yeah. Yours is the one I would go off of. Nuno. 24,670-ish.
Absolutely. I do really think if we come out of this low here today and continue to hold pullbacks into close, this is going to be a fun week. What do we got for news coming up this week? I haven't really checked the calendar here. What's going to be the moving headline? Employment claims on Thursday. FOMC meeting minutes tomorrow. GDP on Friday. PMI on Friday. Consumer sentiment on Friday. New home sales on Friday. Retail sales, that's for Canada. Packed.
A red folder every day.
Yeah. I don't know why I have.
On Friday, yeah. Not bad.
I think that GDP number is going to come in hot.
As long as it moves things around.
Gonna put my Kalshi bets on. GDP coming in higher than expected.
Dude. Hold on, I'm doing some DD for my Kalshi right now. Damons, to your surprise, the trades, everything you see on my YouTube is absolutely not cherry picked. They are all trades I've taken live on stream. That's the interesting part. So I did not look through a certain something and cherry pick that. Those breakdowns you see on YouTube are literally trades I took on stream because that's when I'm looking at the market. And sometimes I'll be like, oh, I could make something out of this. Or like, people are asking, what is this? What is that? Why did you do that? And I'm like, oh, I'll just make a video on it. So it's not to say I wouldn't cherry pick. Absolutely. If you're trying to convey something, you got to cherry pick an example. But the YouTube videos are not cherry picked trades. They are trades that I took.
That's everything we've ever been taught in school is cherry picked, right?
Yeah. Actually, you could say
subset.
everything we've ever been taught is cherry picked.
Yeah, like
you got to give a good example, not just
you're not getting the whole tree, that's for sure. You're getting the good looking cherry. Nobody's serving you that brown, moldy, nasty cherry that was left on the ground for 3 days. They're going straight to the top, picking a nice ripe red one and telling you what you should be eating and looking for.
Yeah, I think if you don't cherry pick when you teach, you'll eventually just be like, dude, trust me, bro. It's not that nice right now, but it will be later. Trust me.
I mean, you can even cherry pick like bad trades too and explain like what you did. I mean, there's bad trades or there's losing. I wouldn't say bad trades. Bad trades to me is like something that I executed outside of like what I know I should do versus a loser because they're separate. So you have losers, which is just a normal part of the trading process. And then you have bad trades, which is you making a decision outside of your bounds and rules that it can result in a positive or negative consequence, meaning like negative P&L or positive P&L. Just because you have a positive P&L doesn't necessarily mean you did it right.
Actually, yeah, I think speaking on that, a good thing to cherry pick would be something like if your idea worked out, the trade worked out, but you took a loss on it because of whatever the market did. So many times, especially with someone who risks like small like I do, a lot of times the idea will work, but I got taken out of the trade by a stop or something because my risk is just too narrow, or I flattened out, I scratched a small stop at the time where it would have held. That happens to me too. So yeah, a good cherry pick would be like, hey, everything aligned, the strategy was there, you got to hit it, but the market just took you out and then went without you, because it happens. It definitely happens. You can have the best trade set up, but executing it was just very difficult because the market wasn't really cooperating, and it just poked around first and did all this, took your risk off, and then went. I think that's something that probably could benefit a lot of people out there too, to see that, yeah, just because you're right on the idea doesn't mean the market really wanted to pay you for it because of how you risk, how you manage, how you execute. Most things you can't control, and that's one of those things. You can be like, yeah, the market's going to hit here. Market's going to trade up here. And it does. But executing it was like almost impossible.
Yeah. Tell you what, when we're on here, we're definitely not cherry picking. We're trading the markets as they're coming to us. There's no picking cherries here.
Unfortunately.
We're taking the whole tree.
No, I don't listen to that kind of music when I trade. It's super chill. It could be like, usually it's like jazz or really like mellow house, even like piano jazz, stuff like that when I'm trading. Yeah. So right now, my music is really mellow. I like to kind of create the environment for myself where there's no urgency to do anything. I'm here. I'm not demanding anything out of the market. I'm here just in case the market gives an opportunity, and I don't have to do anything. There's no urgency. Like, I'm on my time. Sit here for as long as I want, or for as short of a duration as I want, and that's it. It's like not sitting here to make money. It's more of sitting here in case there's an opportunity to make money. That's it. So you got to have like a mellow environment, all that stuff.
Yeah, you can't be listed in a heavy metal when you trade. It's like taking a screenshot of your P&L at highs. It's getting super amped up.
Screenshot curse, man.
I saw that your tweet. I was like dying. I was like, it's so true. I think every time I've ever had like an insane P&L and taken a picture of it, like that is high. I'm like,
I always start TPing right after, but that was just like a one loss. So I'm like, you know what? If we break, I'm gonna get like 300 more points. And the market said, "You're gonna what?" I don't think so.
Yeah, as soon as you go to grab your phone and take a picture, you might as well just exit the trade. I'm definitely gonna.
Yeah.
That is and reverse because
That's
you're
literally
probably,
what I do. Right after I screenshot, if I have more than like 2 lots on, I'm covering everything down to like 1 or 2. Because you're not gonna take it unless it's like, oh, the idea has played out successfully, right? So it's kind of like the end of your thesis kind of thing. But it's okay. I got my get back. They let me go the other way. So, but dang, I was like, I think if that one worked, at least another 300 points downside. But that's when they would turn it around because, well, if it's empty volume like that, they got to find somebody.
Man, we're stalling. We still haven't pulled back a bit, but we've gone sideways for a bit now, at least in the ES, still making some, or I'm sorry, the NASDAQ still making some higher highs. You see how we're stalling right at that midpoint in the NASDAQ? It's literally the high of that first candle. You know, we're closing right up there. That is, once again, that is that midpoint. You will continue to see that indicator on my screen here on NinjaTrader Live, but just something I pay attention to. It's the middle. You know, a lot of people OR mid. I've heard many different terms of mids that people refer to in this. I really only watched the prior day mid, but just kind of gives me an idea of where the market's headed relatively to yesterday. Will we have access to your... Go ahead. I don't know. I don't even want to read that out loud. Anime secret level. I don't know what that is.
What's chat saying, man?
I don't know.
Be careful with chat.
Yeah. I don't know what that means. I don't know.
I don't know. That sounds like a super metal, like a heavy metal band or something.
I hope so.
The heaviest of heavy metal. Yep. It turns out it is.
Will we have access to your oscillator? So I'm gonna have a couple, like the risk calculator and the fair value gap. I'm just gonna give out for anybody because I think I think a risk calculator is really important. Some of that yellow risk calculator you see at the top of the screen, and then the fair value gap, which is not something I created. I've just like converted it into Ninja. So I'm just gonna let anybody who wants those have access to those. And like I said, my goal was to have it done by the end of the month, but the other things will be a purchasable product. It's not something I'm just going to give out because those are things that I've customly created, including my oscillator, which my oscillator actually isn't on this chart. In the process of coding my current thing, I accidentally removed that, so I have to put that back on. But there'll be like 5 or 6 things that I have that, if you want, it'll just be a one-time thing. But the risk calculator, is something that I think everybody should and that just helps you be aware of how fast we're moving. Every whatever time frame you're looking at. Because like right now, I mean, the NASDAQ, it's reading 105 points on a 5-minute chart. Like, if you're really tight with your stop and you're moving, so once again, that's a 50% greater than the average. So if it's 105 points, it's like what, roughly like, I don't know. I'm not that good at math, to be honest. It's probably around like 70 or something. But so we're moving 70 points on average every 5 minutes. So if you're using like a 5-point stop, like good luck.
Your bracket's going to disappear very quickly.
Yeah. Like I'm not a high frequency trader. I can't do that. So I always think your stop should be appropriate to the volatility of the time frame of which you're expecting to be correct over. Now, when XY is in and out in 3 minutes, he can use one heck of a tighter stop than I can use.
I think even right now, it's the ATR in 1 minute right now is like close to 25. So just looking at the order flow, I would be using probably at least a 12, 15 point stop
Yeah.
pretty much.
All right, pulling back into my limits here. I got 24.711 in the NQ. First, hope we can get it. And then maybe continue.
Happy New Year's, chat.
All right.
Happy.
I'm going to be aiming for new highs here. If it holds my stop, I'm going to move to, yeah, my stop is actually fine. Right now, I'm going to move my targets up. Just once again, I'm expecting this pullback to hold, or if it holds, new highs. But of course, market needs to cooperate with my assumptions.
Range candles? No, they're 1 minute. 1 minute Heiken-Ashi.
And what did I say? I said 11:30 for the pullback. What time is it?
The Euro close, huh? Yeah.
11:30.
Yeah, they just ran it out with 0 pullbacks. Yeah. It's about time. What better place than the weekly open?
78, 6,900, 68.80. All right. So see if we can get back up through those midpoints. It's Mardi Gras? I did not know.
No, they're making stuff up.
Never been in New Orleans. Have you?
Yeah. The first time I went was during, and it was so insane. I never want to do it again.
Did you get your beads?
You go onto Bourbon Street, which is where all the craziness happens. It's just packed. It just smells like piss everywhere.
Ugh.
Straight up.
I'm too old for that.
Yeah, it's crazy. I don't ever want to do that again.
Yeah, there's things like that you really only got to do once.
Yeah, do once. You're like, all right, this is for me or it's not, and that's it.
Yeah, if Mardi Gras is your thing,
You're wild.
Yeah, I don't know.
You're wild.
This is my thing. I do it every year. I don't know if I'd ever try anything that might be the worst. Usually try followed by might be the worst is not like something that sells me.
Famous last words.
You should try it out. It might be the worst experience of your life. Sick. All
That's
right,
how you know it's like 90% likely to be the worst.
Yeah, that sounds like a vote of confidence. That sounds like a situation you didn't want to be the worst, but ended up being the worst. Carnival in Brazil, I would do because that's like a totally and completely different culture. It's not a bunch of like degenerate Americans. Like I've had enough of degenerate Americans. Like I'll take some degenerate Brazilians over degenerate Americans every day because I've experienced degenerate Americans. I've been one. I've been there.
If anyone knows them, if anyone knows how to be one, it's me.
Yeah, I've experienced this. I want something new in my life. So why did I pick that level? Well, one, like the theory I mentioned earlier, which I say a lot, is like my 5-bar theory. So we had a 5-bar rally out of low. Now we had an extended rally out of lows. So when we have an extended rally, I start counting from like the point of what looks like a breakout. And literally when we broke out here, I said I was thinking 11:30 would be the pullback. So first off, I'm thinking in my head around that time frame, that's when I want to be a buyer. And I literally said that at this because, you know, this is 1, 2, 3, 4. So this bar we broke out. So 5 bars past that, I said it at the time, is going to be 11:30. So as we came at 11:30, you got a fair value gap there in the NASDAQ. This is the point of which if bears can't get back below, they're really failing, right? So this is where like the bears are anybody short this market is looking at, let me move this out of the way, is looking at this bar where we really started expanding up here at 1110, saying, man, if we can't press back below that, we're kind of screwed. So this is where bulls need to hold kind of this idea, because this is the really aggressive bid. This is a very aggressive bid. If we don't hold here, I think today is going to be more choppy. We're either going to trend from this position up for at least maybe into like 2 o'clock and then get a deeper pullback. So that's just my theory. So just looking for a support level to trade around the time frame, of which I did. I mean, my ES level is a little bit of more of a snipe right now. It's 43.5, literally within a few ticks of that low. But same thing, looking for that sweep of highs. We'll see if we get it, but there goes your not cherry picked setup. You can't get my Ninja indicator right now. You will be able to get my Ninja indicator at the end of the month. I just have to, I got to get everything together. I have so much that I'm working on right now. Streaming is just one of the things I do. I do a lot of, I am juggling 6 plates. So, this will be, I promise to get it on Ninja by the end of the month, and show you guys a little bit more about that. I mean, I find it super helpful. If you guys find it helpful too, great. But
you know what would be helpful?
What would be helpful?
A new high a day in Q.
Yeah, I agree.
Yeah.
I agree. I agree.
No bias. I agree, but unbiased opinion is you are correct. Yeah, tape
would your
is moving.
process work on a 1-minute chart? Yeah, my process would work on a 1-minute chart. I mean, I think almost any trading process, good, solid trading process, can work on any time frame. It's just a matter of the executor. Like, you have to understand a few things about the market. It's like, I always think time, speed, it's momentum, time, and price. Like that, every calculation I'm doing is considering those. Like, what is the momentum of the market? Based on that momentum, like, you also obviously have to have a bias of higher or lower, or you can have a neutral bias and trade a range. But if the momentum, like, to me, the last leg of the momentum is up. Now that can change, but I'm going to let it change. I'm going to let it prove itself. I'm not going to try to short when the momentum has been up. So momentum, and then I come up with a price level. Okay. So the price levels, those levels I just got long. And then the time sequence was one where I was buying and actually where I was exiting. Because if we start breaking out through this high, within 10 minutes of my entry, I'll probably move my targets up, because that tells me I'm super right. I have never used Footprint.
AF4, not sure how to say your name, but if you go on my socials, you will see everything that I do. Just go on my Twitter account. It's in the description somewhere on the stream. I literally have a YouTube and a playbook publicly published for free, and everything is in there. I'm not talking. I'd say I'm talking. Well, I mean, Jack's pretty much giving you guys the play-by-play of what's happening right now. I can't place trades on my account right now. I'm waiting for them to kind of resolve that. So, yeah, I'm just following along. But the long definitely is working out nicely. 90 EMA pullback, 5-minute doji candle reversal. It could be so simple.
So if we get new high within 10 minutes of my entry, like, my targets are going up and my stops are going up too. We're not there yet. That low was 10:31. 11:31 New York time.
What platform do I use for cash account? This one, NinjaTrader. I trade a cash account on stream. Jacob, I don't know if it's a hot take. Depends on who's in the chat that's a wine drinker, but I think Camus is extremely overpriced. Yeah. So if you have found a comparable that's just as good, which there are many of, you'd be served well. Yeah. Camus ain't what it used to be, for sure. And you'd always hear about it in the wine world, right? It's kind of like it's become like the blue label of whiskey. It's just when you say blue label, you're like, oh, it's nice, it's fancy, it's designer, it's a good gift. Kind of the same thing with Camus. I guess that's where it's gone, I'm guessing. But yeah, it's really like juicy. I guess you could say the first time I had it, I was like, oh, I kind of see what people are talking about. Like it feels like juice. So I did some digging and apparently it's mostly juice. It's not the Camus that people were used to back in the day. It's just been super commercialized or something. But yeah, there's also a lot of, they'll say if you like Camus, you'll like, this, this, and this, and it's comparables that are like half the price, and apparently they're very good.
Yeah. Now that I'm on air with a sommelier, can you drop some of those names for me so I can start buying nice.
I don't remember
gifts?
them, honestly. My wine knowledge is like very in a vacuum, and like I've drank so many and I've tried them and I enjoy them, and I just don't remember what I even drink. Like I don't. Sometimes I'm like, oh, I really like this. I'll take a picture of the label, and I just lose it. And I just forget it.
Just
And
lost in the 20,000 photos you have
yeah.
saved. Goes down with the P&L screenshot. This P&L screenshot folder.
Yeah, so my wine knowledge is very limited, I would say, still, because there's just so many. I mean, wine knowledge here. I worked in wine for 4 years. Depends on the Camus. Yeah. Um, I'm trying to be on the Opus level here. So if anyone wants to
Ooh.
send me some Opus, hey.
We can get a Amazon. What is it called when people have like those Amazon wish lists?
Get a wish list going.
Like a wine wish list. If you've taken any of XY's trades that have made yourself thousands of dollars, please contribute to the
Feel free
Opus
to give
Fund.
back. A little gesture.
It'll be like that in like a cute little costume or something. At the XY, I'm going to show up on stream one day in the XYZ uniform.
The robe? Dude, it's so comfy. It's really cold out here in Cali right now.
Oh, I bet. Oh, yeah.
Yeah, and I'm talking cold. We're talking like high 50s.
Oh
It's
my
freezing.
gosh.
Dude, if I go outside, I'd be an icicle.
High 50s this week in Chicago. People running in their shorts.
It's 51 outside right now. And if I went outside, I would instantly get sick. The first time I went to New York, it was like during winter season. So it's probably like November. And it's cold as hell, right? And I'm like, dude, this is freakishly cold. And I just see people out in the morning jogging with like shorts and a tank. And I'm like, this is insanity. These people are insane. In California, if it's like slightly windy, it would be like, oh my goodness, like, are we safe to go outside? This is insane. Everybody get inside. Everybody get inside.
Oh my gosh.
That's why I'm always in a robe. It's always a little
sounds
chilly,
like y'all
you
a
know?
bunch of sissies over there.
Dude, one time I was at the casino in Vegas and we were playing dice, and this guy next to me, it's an Asian guy too. And I'm like, it's freezing in the casino. And he's just in a t-shirt and cargo shorts. And I'm like, not cold? Like we were just talking. I was like, so you're not cold? And he kind of has a beard. He's like, I'm from Minnesota. I was like, that's why you have a beard. It's like an Asian with a beard? Something's not right. Yeah,
Asian
he's
with
not
a
even
beard?
Asian.
That's rare.
Dude, he had a full, like a legit one.
No.
And I'm like, yeah, that sounds about right. He's
a special kind of Asian right there. I don't
Minnesota.
know if I've ever seen that. That's a Minnesota. It's a Minnesota
different breed.
boy.
He's like, it's
probably
nothing.
ice fishes. Probably has a snowmobile. He rides to work.
When you see cargo shorts, you just know like this guy does some real manly stuff. Because that's just not in fashion no more. Anyone who's wearing it is for practical purposes.
Yeah, I'm not gonna lie. I can't even grow a beard. I feel like you're the same. We're the beardless boys.
Absolutely.
You can do like a dirty stash, but
200,000 likes and he'll do it, chat.
Yeah. People will be turning off the stream. You'll be able to smell it through the screen.
This his camera's giving me drawdown. Get him off the camera.
Yeah. Yeah, the camera's giving me drawdown. Yeah, going nowhere. I'm moving my targets back to where they were. I got a little aggressive, getting excited, thinking, I mean, I'm still fine in these positions right now, but I'm not going to go the extendo targets that I was looking for. I was thinking maybe if we bust it out that fast. I still think if we take out this high, I mean, we're basically going to be taking out highs in the NQ, which we have not done yet. Russell's spending some time up here. I mean, I haven't looked at the Dow in a minute, but I think I'm still finding my positions, but I moved my target all the way up to 6,900 basically in the ES, which I do think could trade today, but it's a matter of like, do I want to take the heat of a potential pullback? If that were to happen, we're in the middle of lunch too, so things could definitely just slow down, maybe get retests of my support levels before moving higher. Tough question here. I'm 18. I want to probably learn how to trade. I already lost my savings to props. What should I do? First of all, I would take a break from buying any. You need to make a rule for yourself. And I would assume you probably, if you don't already have one, you probably need to get a normal job to like realistically like stack your cash again and be okay with sim trading. I would dedicate just a certain time frame of the day to trading. I would not be spending, 8 hours a day, 6 hours a day, even 4 hours a day trading. Limit it to an hour and a half just as an overall framework. And then you need to really work on your strategy and decide what type of trader you're going to be. I mean, learning how to trade is not an easy task, as I'm sure everybody here knows. And you're probably going to lose a decent amount of money before you make any money, especially if you don't have somebody really holding your hand through it. I mean, NinjaTrader Live is a great resource for people to learn. But, first of all, you got to be confident as an individual to be successful in trading, because it's really easy to lose hope if you're 18 years old and you just lost all your money trading props, trying to trade, sling 5 at a time or whatever. You just need to rebuild your framework. I would honestly get a day job and not to think much about trading. You're 18 years old. You got a whole lot of life left to you. So don't be too down on yourself.
It takes a really long time to really get your feet on the ground in the game. I think maybe because you're 18, you're probably seeing a lot of like Instagram, TikTok trading content, and I promise you it's all fake. I promise you. So just try to somehow ground yourself in the actual reality of trading as a profession, and you'll find that if you're constantly blowing accounts, I mean, sim trading exists. So you can build a strategy, you can start to build a strategy, hone the strategy, and get proof of concept. If it's not working for a long time, like over months long of a data set at least, you can't make money. You're running on negative, expectancy. So you have to nail that down first. And just, try not to fall into that TikTok stuff. Like, oh, everyone's going to be like, I made $30,000 today, but it's like $200 on 60 accounts or something like that. Like, it's just not, this is not how it works. You're going to see so many big P&Ls like, oh, 50,000 in a day. And it's like, copy trading 250 prop accounts or something like that. But that's not even a payout. It's just sim profits on a day. So don't fall into that stuff.
Yeah, I would say any trader that spends their time making TikToks is probably not very good at trading and probably pretty good at making TikToks.
Yeah, I think about it a lot. Like, I'm trying to make content and I just don't have the time. I literally do not. And I'm like, why don't I? Well, I think you'll have plenty of time to make content when you're not actually trading.
100%. Even like YouTube content's probably the easiest for me to make, and it's like, and that's just because I just get to like pull up my screen and like record. I mean, we're basically making YouTube content now. But if you're like editing, like it's like, but then you got to have a good thumbnail, because if you don't have a good thumbnail, then you got to like write the caption well, because it's like okay, like, you know what, like I'm just gonna focus on trading. Like I don't really
You
have
got to be
time
an
for all that.
AI, like AI god, just know how to leverage it to do all those things. And yeah, that would be the way.
Let's see here, I am gonna be approaching. So from that low at 11:30, once we get like 25 minutes in, I'm just really going to tighten up here, because I don't want these like what is basically small winners to turn into small losers. So gave it the time. We just may get retests. Yeah, I'm going to stay that way because I don't have the time to make TikTok reels. I really.
But it has to be, I think if you're making TikTok content, it has to be really clickbaity, right? Like the title's got to be like, I made $16,000 in 5 minutes or something like that. Or like,
Yeah, no,
gotta have
exactly.
P&L in the title to some
Yeah,
degree.
and then you got to have like your shirt off at the beach in Miami. Like I live in Chicago. It's really not a great place to make like beautiful content. I have no palm trees. It's like I live in a gray jungle for like
All
at
right,
least
I
the
know
next
what I'm
4
gonna do. I
months.
got some palm trees.
Yeah, you do. Just go under the palm tree, pretend like you're trading from your phone.
Just sitting in a hammock with a laptop.
Yeah, dude, you just made 10 grand. You're chilling.
You're probably wondering why I'm sitting in a hammock outside right now. Well, I just made $30,000.
And now I'm
Just
going to
by following
lunch.
this line here, this squiggly line called the 9 EMA.
It's so easy. A kindergartner could do it.
And you always got to end it with something like, so what's your excuse? Buy my course now. What's your excuse? Do you hate your family? You don't want to support them?
Yeah.
Is that what that is?
Oh my God. Out of curiosity, I've gone through some of the sales funnels where they like call you. Just I'm like, what could they possibly be selling for $8,000?
You know what? Peel back the curtains. What happens when they call you?
Yeah.
What happens when they call you? Do they just kind of like try to poke around and see how much you're willing to spend?
So like when okay, I'm not gonna name like the influencer, but you probably all have heard of him.
Yeah.
So I go through this sales call, and like the guy was like, he was just asking me about trading. I was like, yeah, I've actually been trading for 15 years. But I was like, but I'll actually buy this course if I feel like there's something I can learn, because I've bought courses before. To be honest, I've bought courses before, and I have found value. If I can learn one thing from a trader that's like really valuable, honestly, it's probably worth $2,000 or even more to me.
Mhm.
But what I find is very few traders actually have like one solid piece of advice that they could give me that I don't already know or is like groundbreaking. So the guy actually stopped trying to sell me. He was just like, dude, I actually kind of, because I asked him, I was like, can you give me, I was like, I just want to know, and I was like legitimately interested. I was like, is there like one thing that is this person's favorite trading setup that they find to be like their A plus? And then he's like, well, let me show you a video of this individual like trading the other day. And it was just like, it looked like this person was like coming out of like a hangover, like was not mentally clear in his thought process. And he's like, oh man, that was like a really bad video. This is a sales guy telling me, he's like, that was a really bad video. He's like, honestly, he's like, if you've been trading this long, he's like, I really don't think you need this course. And I was like, all right, then, like, I'm not going to buy it. See you later. Like, but I mean, oh, Jim.
Hey,
Man,
guys.
I want Jim's trading course.
I do too.
Oh, my goodness. How you guys doing?
Doing good.
So I just want to let you know I have 12 palm trees.
Oh, we've seen them. We've seen them next to the gigantic pool where your private jet is parked. Yeah, we've seen them.
Very small pool. Very small.
I need
very
Jim's
small
course.
private jet too.
Yeah, I need Jim's course because I need to live like that.
Dude, I need the green on top of Jack's screen right there. He's killing it.
Yeah, well, we'll see. These trades still need to get closed out before I can count them. They're just eggs right now. We got to get that chicken hatching.
Yeah, I mean we almost have on a daily candle. If you look at even the S&P, I'll show that in a minute. It's like we have a doji, long-legged doji at the bottom, but it's unched on the day, and it's an inside body of a bar from yesterday. So it's a crazy day.
Mm.
Definitely a wild day. I was saying that like this volatility. I mean, that opening drive higher. We had a couple 150.5-minute candles in the NQ. That's when I think we had almost 3 of them. We had 2 of them, and then one was a 145. But when I start seeing that on a Monday, I'm like, this week there's a lot coming up. GDP, potential SCOTUS ruling, and retesting of some daily support levels. I would not be surprised if this is the low of the week here today.
I don't know.
The red folder week.
I don't know. It's a tough call. Very possibly. We have that swing low in the S&P from December 18th, which is at 67.71. I thought we were going to hit it today, but we didn't. So we'll see.
Yep.
We will see. In any event, awesome job, you guys.
Thank you.
Let's give these guys a round of applause for laying it on the line for us.
It's no more. It's not a golf clap. It's like an awards ceremony clap now. They've upgraded us.
We got to go up to the podium now and thank some people. Actually, who are you thanking? Anyway, will I see you later this week? I think I will. I'll see both of you guys, right?
See me every day this week except Friday.
No way.
Yep.
You're on everyday patrol?
Well,
Sweet.
tomorrow, I mean, it's Tuesday, tomorrow's Wednesday's Thursday, and then I guess I get Fridays off, Jim.
Yeah, I don't.
Working them. They're working them.
Don't rub it in. No, I'm glad I don't, because I get packs in the morning for 2 hours. It's the best. Oh, man. Any event, this afternoon we do have Leo, Nick, and Joey. Remember, it's a 2 o'clock start. Tomorrow is a 1 o'clock start with me and Larry Williams, and then we'll go into the regular stream in the afternoon. So a lot of stuff going on here in NinjaTrader Live. Thank you for the subscriptions, the likes, the thumbs up. Appreciate these 2 guys landed on the line. I am going to do a quick edge report, and we will break for lunch.
Jim, is that Larry Williams, the author?
The Larry Williams, the trader.
Oh, okay. All right.
So yeah, he's my generation plus. He's a legendary guy.
Okay, I think I know what you're talking about. All right, take care.
All right, you guys. Thank you. Bye. All right, E-mini S&P. That's what we're talking about. Up until now, this was a total doji. We have a little bit of a build up here to that 38.1% retracement on an outside fib at 68.62 right now. We do have that VWAP from November that's still, I don't know, pretty far above where we're at right now, 68.92. I mean, maybe not, but still, sellers are in charge still. And then the annual VWAP is way up here. So again, we're not out of the woods yet. This is a really nice wick, though, at the bottom of today's candle so far, knock on wood. Buyers just fought and pushed this thing all the way back up. Again, I was looking for these swing lows at 67.71. And then we have a target wick down here at the bottom of my fib, and that's I won't even tell you approximately. I'll tell you exactly what it is. That's 67.51 half. So that's a couple of targets down there should we start selling off. Intraday, it's been a really great intraday trade today so far. We do have a double break of the initial balance, right? We have here's the initial balance high. We wick through that several times. Sellers keep pushing us back down. This is acting as resistance right now at 62.25. Then we did have kind of a tweezer bottom down here. This is a 10-minute candle, a tweezer bottom down here, and then buyers push this back up. So that was another break of that IB. If you're just tracking breaks by candle close, then we don't have one yet. Well, maybe we do. Let's see what happens here. Where do we close here? We closed at 61.75, IB high, 60. No, missed it by a tick. So we didn't have the candle close, but we did have the wick close. So, it's not that big of a deal. Point of control though is really pretty interesting. It kind of popped up here to 68.58. So this is all of that wick on a daily that you see, and this is where price happiness is right now. So we'll see if we trade around that the rest of the day or something exciting happens here in the E-mini S&P. The Bitcoin isn't quite as doing quite as well. Let's check out the Bitcoin right now. Again, we've got a couple of things to think about Yeah, there's one positive thing here. This 67.015 level is the midpoint of the green candle. We pretty much stayed above it, with the exception of one close below it. That's not bad, but we're testing it again on the downside here. We're down about 30.61%. Let me adjust this to reflect current prices. We're down about 31.29% from the swing high that we saw up here January 14th. Trend channel we broke through. We were going down. We broke through that trend channel, that trend line, loosely fitting trend line. So right now we have a little bit of a support and resistance zone forming right now. The top of it is around 69. We can call it 69.070. The bottom of it's around 65. 520-ish. So again, sideways for the last 1, 2, 3, 4, 5 days right now. Intraday for the Bitcoin. Well, there's that VWAP. Now, this is an interesting case. I just want to talk about the VWAP here. This is the session volume weighted average price. 1, 2, 3, 4, 5, 6 candles in a row had traded through that VWAP. That's kind of unique. That means we're kind of sideways indecisive right now. We are above previous sessions lows right at that JX3 and that high vol level, which is kind of framing the kind of area of support around 67,500. So again, sideways bound for the Bitcoin. We'll see if we break out one way or the other later on today or even this evening. That is end of morning Edge Report. My name is Jim Cagnina. Thank you for being here with us. Looking forward to seeing you guys this afternoon, 2 o'clock start time. So take care, relax, have a nice lunch. See you then.